TJ Miller?
Yeah.
I saw him in Dallas.
You did?
Yeah, he made fun of me. It sucked. I don't remember what he said, but I don't remember feeling good.
I'm on a Netflix comedy special, getting heckled, or I was heckling and then ended up getting pretty royally embarrassed. And
Really?
yeah, it was in Echo Park in Los Angeles, and I was laying on a beanbag in the front row, like basically blacked out. And I don't even remember the name of the comedian. I just kind of blacked that out of my memory. So we have that in common, dude.
So you're not going to tell us what episode it was or what show on Netflix?
I don't even know who it was. I signed a waiver when I went in there.
Well, AI will be able to like recognize you. We'll just
I'll
find a picture. We'll feed it a picture of you and be like, scan all video footage of, obscure comedy specials on Netflix.
Yep.
Yeah.
And then it'll be like, here he is.
I went to Eliza Schwartz. I don't even know her name.
Schwarzinger.
Yeah. And it was a Netflix special. And I was dating this Indian girl at the time. So we were like an interracial couple. And we were waiting in line. And then somebody was like, oh, yeah, these are good. They put us in the front row at a table.
Yeah.
And I think I'm on I actually haven't watched it. It was pretty funny, I guess. But
We had Indian food for dinner last night.
oh, nice, man.
Dude, I'm growing. Last summer, like I was all about Chinese food. Now I'm learning Indian cuisine.
Mm-hmm.
I'm exploring the different cultures of the world. Bitcoin will do that to you.
Oh, wow, man. You're growing in the bear market. That's impressive.
That's what they say. Have you guys been building?
I
That's
think
what they say. Bear markets for building.
bear markets building conviction, that's for sure.
So we're building hardened skin.
True. The second one, it's just another layer. Bears. The bear market. Are we recording?
Yeah, we're recording. yeah, we're recording.
Yeah, this is grade A stuff.
Like 76 views on the last one. We'll see if we can.
Hell yeah, dude.
Yeah, so this is episode 30. Well, this is the 30th episode we're recording, but this is probably 28th to be released of Value Stack. First anniversary of a recurring guest,
Wow.
Mr. Sam Callahan.
I'm honored, man. And honestly, you're building the bear market.
That's
Value
it.
Stack.
I was leading into that exactly directly.
There you go.
Thank you for helping.
Yeah. Hey.
Yeah, man. And you have too. You've had a I think we were just watching last year's 2021 Value Stack. Was it episode 12? I think was that one. And Sam said it was his first ever podcast.
Yeah.
So you built quite a what do you call it? Not directory. What's the thing on IMDb?
Resume?
Yeah, resume, discography. No,
I don't know.
No, that's for an artist.
How many CDs do you have, dude?
I'm thinking about having a greatest hits here soon. But
the
The
Bitcoin
IMF.
mixtape.
one or two people buy it. Who knows? Got to stack those stats.
So when does the mixtape drop? The Bitcoin.
It's true.
mixtape.
I should take my best clips of all of the podcasts and mash them together.
Now that's what I call Sam Callahan.
Yeah.
Oh wow.
Exactly. Volume 1.
Volume 1.
So we have more volumes.
Each year, until people stop buying them.
Yeah.
Which I think they still are. There's it must be on like 100 by this point now.
Yeah.
Now 100.
Oh yeah, dude. Now what is that? That's a business model right there. I don't know how they get away with that, to be honest with you, but wow.
What do you think will last longer, the Now series or the block subsidy? 130 years to go.
I don't know. Maybe the Now.
Maybe now.
I mean, the Now.
It is always now. So
That's true.
It's brilliant.
That's true.
Brilliant. I would like to actually see CD, like album sales. I bet Now is up there. Each one.
I haven't seen them on like the like Spotify playlists and stuff. Like, like you figured like they would adapt and like start building the playlists and like market them on these. But I see it's all like Spotify's their own playlist, or like YouTube Music's its own playlist aggregator. It doesn't like license out to these, other brands.
Yeah, they're going to have to roll out. Now that's streaming.
Now that's streaming. That's
One.
what Spotify is. That's what I think that's what it is.
The Spotify killer.
Yeah. Well, the stock market, Spotify hasn't done very well. Neither is Bitcoin. I don't know if you guys we're supposed to do this. This is a year-end review episode. I don't even know which camera to look at. And this year, I don't know. I think like maybe we start off with describing this year in one word.
Harrowing.
Harrowing. Okay.
Carnage.
Terrifying. Yeah. Comforting. Anybody? Bueller. Comforting.
Conviction.
Encouraging. Yeah. What? Any of y'all want to like riff on like why? Like I guess we'll start. We'll go through like each quarter a little bit. We'll spend like I don't know. I feel like Q2 was kind of a bit quieter. Or no, maybe that was I don't know. This entire
Q2 was pretty noisy.
The end of Q2. Well,
yeah.
We'll spend a little bit on each quarter. We'll do some predictions at the end. But yeah, I guess like either you guys want to start with like talk to us about like what where that one word description come from, harrowing, or what was the one you said?
Carnage.
Yeah. These all sound terrible. Yeah, you can tell the year-to-date returns for Bitcoin are not positive.
Yeah, I started this year by reading The Fourth Turning. And I read that book and I thought, like, how bad could it get where I would need to, like, recreate institutions and, like, be on the front line of that? And I just thought it seemed kind of foreign. And then now, by the end of 2022, it's all making a little bit more sense.
Yeah, absolutely, man. I think, the carnage that we've seen, I think it revolves around a lot of things. I think it's like increased geopolitical risks and tensions with the Russia invasion, and then all the aftermath of that, energy crisis. You got China still locked down, so things are just still kind of heightened geopolitical risk across the board. And then you had a Federal Reserve that just flipped from easy monetary policy, zero interest rate policy, quantitative easing, to one of the fastest hiking cycles in its history. And now they're doing quantitative tightening. So that has caused all kinds of carnage because it's basically blown up all these Ponzi schemes in the broader cryptocurrency industry, all these highly leveraged organizations. It's also, as the interest rates rise, it's been a big, headwind to risk assets in general. And so once that started happening in March, that's when shit really started to hit the fan. And, Bitcoin's just one asset in the broader macro. It's a very small asset, and it got tossed around. I think we should expect these things with Bitcoin. I think the volatility is inherent in that asset. I think people maybe, going into the end of 2021, the bull market was so stupid at the end there. With the broader crypto industry and NFTs and the human, like the just emotions and the euphoria and the excess and the just stupid shit you saw every single week, man. It was like not fun for me, honestly. The bear market, I actually enjoy it more.
Yeah,
that's when American HODL came back. Like you knew we were in the official bear market once American HODL rejoined Twitter.
I found the bull market very noisy.
It was
very annoying. And so you saw the signs. Like I went to ETH Denver. I didn't go to ETH Denver. I went to the bars. We were together. We were together, dude.
Yeah, we did.
We were at the bars.
Shh, don't tell him. I wasn't going to say that, bro.
Yeah, no. We were at the bars just around ETH Denver.
See what it was at. Yeah,
I did not go to ETH Denver, but we were there, and then just some of the conversations I had, it was just insane. Like I honestly, it was like that scene from The Big Short where it's like, sell everything, it's a bubble.
Was that February or that was Q1?
That was around February.
I remember
that was Q1.
It was really cold.
It was February because I tweeted something out and it got a lot of traction because I said like, this is just yield through a cross bridge, other yield.
You are the yield.
It's a huge house of cards and it's bullshit. And, you know, little did I know that was 3 months after the top. Like,
Right.
I didn't really know that at the time. It's just those signs were there. And, you know, did I know that it was going to be as bad as what happened? No, because, you know, that was before the Fed started raising rates too. So a month later, Fed raised rates, and all this like bullshit yield just fell apart, and it was a house of cards. So I think it's a good thing. I think bear markets are awesome in a lot of ways.
Yeah.
Especially if you have a long time horizon. Like, you should want these things to get cleared out. You should want fraudulent operations to be exposed. It's creative destruction. It's good for the long-term health of the industry. But that doesn't mean it's not painful as you're going through it. I don't want to minimize it.
Yeah, we weren't gonna achieve world currency reserve status slinging JPEGs like that.
No, man.
There's a lot of froth. There still is. I mean, shoot. I mean, Trump just launched his like NFT thing this week.
Those are pretty sick.
Yeah. Did you see the 3-headed one with laser eyes? It's like really jacked, like an ogre.
No way, Trump with laser eyes?
Yeah. A 3-headed Cerebus Trump. It's like,
how much is that going for?
I mean, I think
million.
they were selling them for Matic, which I don't even know what that is. I think so.
Take my Bitcoin.
Yeah, so we might still be we might have further to fall.
Yeah, man. When you see shit like that, I mean,
yeah,
you got to raise those rates, dude.
Yeah.
Clear this shit
Money's
out.
too cheap.
Yeah.
Well,
I have a little antidote. So I started the Taos Bitcoin meetup.
yeah. How's that going?
It's still going, which is pretty sweet. And it started with like 4 or 5 Bitcoin maxis, and then all these like crazy crypto people that were like, oh, I'm living off of airdrops, and like I'm either going to be a billionaire or like living on the streets. Like, this is the kind of shit I was hearing from people showing up to the meetup. And it's just the 4 or 5 of us. And
It's the few people who get it still.
Yeah, it's a great 4 or 5 people.
That's cool, man.
Yeah.
Yeah, that's what Tyler was saying. Like in the Tyler Blockbane, when like Denver Bitcoin and beer first started, like there's come and go the crowds, but it's getting better because it's like Denver's like becoming a scene, you know, and like that's what it's like. It's really cool to be able to like have these in-person podcasts. Like, you think about just how many people. I mean, you drove up, but like think about how many Bitcoin. I don't hate the word influencer, but just like people who work in the industry who either have been on podcasts or write about Bitcoin, talk about Bitcoin, or even travel through Denver because it's like such a big metro, connecting hub airport wise. So it's pretty amazing to like be able to like be here, and
it's grown a lot, and
it's not falling anymore. Like the attendance, like Bitcoin and beer had like 30 people last week. In the winter.
Yeah, man.
I
remember 2018 was similar, because I went there and there was only like 4 or 5 people there, and it was so much more signal during 2018. And then, it's the same thing where you get a lot of speculators, get a lot of people trying to get rich quick. And it's hard to like explain to them how this isn't a get rich quick scheme. It's a, get wealthy slowly.
Don't get poor slowly.
Don't get poor slowly.
I mean,
exactly.
Look, none of us got poor slowly. It was very quick. It was quick this year, bro.
Yeah. On paper.
Yeah, that's right. One Bitcoin is one. I'll quote last year's episode. 1 Bitcoin is 1 Bitcoin. That's my prediction.
It's still true, dude. It's still true, man.
100 million sats, 1 Bitcoin.
But I did like what Beau said. There's a certain like financial nihilism with other cryptocurrencies and NFTs where it's like, I'll get rich or I'm going to be on the streets. I don't care. And I think that's a function of the fiat system of feeling left behind, these young people, and
why people play the lottery.
Right,
it's priced out of housing, priced out of stocks, don't know how to build wealth. So, hey, we're already in our mom's basement. Why don't we YOLO into this JPEG? Who cares? And so it's kind of sad. And you try to just educate them and understand the difference between Bitcoin and crypto, which is what I think one of the best takeaways of 2022 was. I think Bitcoin has separated itself from crypto a little bit in terms of people understanding some of the key differences between it and other cryptocurrencies. So
yeah, what Where do you guys want to start? Like, should we just go like into Q1? Like, I think the first thing I remember about Q1 was BlockFi's announcement that you couldn't sign up. Like, it was led in BlockFi, basically all in the same. I mean, maybe it was January or February.
They paid a fine,
and they were like, you can't put new money in the account anymore. You can still keep your current Bitcoin in there earning yield.
Yeah.
But you can't add any new deposits. So you have like a legacy account. And then they got the SEC thing. That's like,
I think the first thing I remember, and it's just kind of tied to that, is like, I think in like early January, Celsius's CIO was arrested in Tel Aviv or something. Mm. And I
don't remember that.
Yeah, just for full disclosure, I did have a loan through Celsius at 1%. LOL.
Oh, wow.
Yeah. And,
got it out though.
I got it out in time.
Wow.
I remember.
Good for you, man.
Skinnier chin.
Yeah, I wasn't surprised at that at all because if you follow the regulators and what they were offering as a product, it was very, very similar to a savings account at a bank, except they didn't have license to be a bank
or insurance or
anything.
Any kind of controls in place.
So they're basically charged with being an unregistered security, all their interest-bearing accounts, and that's why they paid the huge fine. And that really set them back. That I think that hurt BlockFi.
I think the SEC is one of the largest creditors in BlockFi's
current
bankruptcy. They still $30 million.
They are.
They're still on there. Yeah. But yeah, so it wasn't really surprising to me. Recently you had Nexo, which is a similar platform.
How are they still not bankrupt?
Well, I don't know, but they're leaving the United States.
Oh.
Because they're offering the exact same product that BlockFi was offering that they got fined for. And so they're like, hey, we're going to get the hell out of the United States because we can't afford to pay a fine like we did, like BlockFi did, I think. So, I mean, it's the same product. So
are they going to be able to do that? And like, how do they get out of that?
I'm not sure, but all these crypto lenders that haven't imploded yet, I mean, to me, they were doing the exact same thing as Celsius, BlockFi.
Right.
They're basically, running these lending firms and then being a hedge fund on the back end.
Yeah.
YOLOing into risky
and
assets. And
Nexo's got their own token.
Yeah, and that's a huge red flag. So did Celsius. So
did Luna. And
I think I'm not going to name specific names. All these different crypto lenders that are smaller.
There's so many of them too.
I mean, yeah, there's Nexo, there's Crypto.com, there's KuCoin. I guess I did name names, but I don't know. I don't know which one. I'll be honest, I don't know which one's gonna implode, but I think we could see more of that, and perhaps there's already bodies in the water. We just don't know it yet.
I guess tokens don't make any sense to me. Having like a native token to a business, if you're not a true security, I mean, if you're not going to get paid dividends from those tokens at some point, then what's the point? I've never understood.
What's the point of growth equity? Same question. There's no.
But you buy a growth equity because you think it's going to eventually pay you back.
That's why you buy. That's why these are unregistered securities, because people have the expectation of future returns in them, like built in, right? Like, because it's controlled by a few people with the expectation of profits based on their efforts.
Exactly. Yeah, to claim on the business.
Except they have no rights, right?
You have no rights.
0 rights. So they're
just
unsecured.
Stood
creditor.
up to borrow against.
Yeah, man.
Just making the business more vulnerable.
Well, this is the kind of thing that I think this bear market will do is expose. I think we're having a dog over.
Was he farting a minute ago?
Was that a fart?
Yeah, I thought it was one of you guys.
No, that was him, dude. He was like,
so loud.
That was a big fart from that little guy, dude. I bet the mic picked that up.
Oh, I did. Oh, I heard it for sure. We're not done yet, right? Like, I mean, we were just still in Q1 here in this part of the episode, but like, I'm not sure that I think you said bodies floating. You don't have to you just have to survive long enough for your enemies to float by the river or something like that.
Yeah.
forget what saying that is from, like Art of War or something.
Yep.
But I think we've got some floating left to do. And I do think, like, part what you were saying about Q1, I think the biggest thing this year has been historic interest rate policy. Like, it's not that the Fed hasn't raised interest rates by several percentage points before, but they've never done it from zero, right? And so I think of it like, okay, like when you raise it from 0.25 to 0.5, that's a 100% increase in interest rates, right? But like,
shout out Kathy Wood.
Yeah. It's like,
no,
dude,
it's anti-shout out Kathy Wood.
Oh, why?
She went saying shit. She was talking about the percentage increase, but going off a percentage of basically zero. So she was talking about how this wasn't like, not even on the same scale of anything in history.
Yeah,
like this is, like 1,000 times greater, but that's bullshit. It was 0%. Now it's 4%.
Right.
Yeah.
But I guess
it's just 4%.
It's 4%.
But like, it's been a bigger magnitude for the market to adjust. Like,
it's right.
An adjustment from 0 to 4 is going to be felt a lot harder than from 4 to 8. I think
a little bit more. I think.
It seems that way. Like based on the, and what's amazing too is like, given the sort of a historic aggressiveness of the Fed policy, inflation hasn't really come down like that much. Like it's still 7% something year over year, right? CPI, wasn't it? The reading was a couple days ago.
It's about flat.
I mean, that's CPI. Like it's really more than that, but
yeah, I mean it's flat. So, but I think the rate of the interest rate hikes has been incredible. It's actually, that's one of the things that surprised me this year was how far they would get it. And things haven't, this honestly hasn't like broken. There hasn't been.
No, it's a very resilient economy. It's surprising.
Yeah, it's been pretty resilient in terms of treasury liquidity, in terms of the stock market only down, whatever, 25%.
Is it just like the white collar, like higher net worth individuals that are feeling like people who have like investments and stuff? Like, is that really where the economic slowdown is being felt? Is like not under like laborers as so much as like your investment aspect of the economy?
I think it's hurting everyone a little bit, but I also think it's just getting started. There's such a lag with all this.
Just
like
get started, rates. Dude. I'm already down 90%.
The shit coins are. But
Netflix, DocuSign.
Oh, that's true.
Crazy.
That's true.
A lot of these big tech stocks are trading like shit coins.
Well, that's what I was gonna say.
Meta.
Like it's been. I agree with Beau. I think we're in the early innings of an economic slowdown, and so you've only seen layoffs isolated in the tech sector. Some of these more long duration sectors that are really a function of the interest rate hikes, but we haven't really seen any kind of earnings recession, and we haven't really seen the layoffs spread out to other sectors. But you're starting to see it now. Like you saw Goldman Sachs lay off 10% of their workforce.
I didn't see that.
Yesterday or 2 days ago. So you're starting to hit other sectors. But it has been more resilient. Like it really has. I didn't think they'd be able to get rates up to this level with the debt levels. And I think it just takes time. I think what Beau was just saying with the monetary lag, we're feeling the interest rate hikes from like early summer right now. And they've been hiking 75 bips and there's another 50. We're not going to feel those until Q1, Q2 probably of 2023. And so I think that's where I'm looking and this would be the first time ever of a Fed hiking cycle that we didn't have, an ending with a rise in unemployment and an earnings recession, decline in profits.
Right, because why would they stop hiking until that happens? They're going to give themselves as much headroom for the next crisis as possible, I would think, right? Because that's kind of where they got stuck in 2020 was that rates were only like, they'd started raising in 19 and then boom, 20 came and they dropped it to zero again.
That's right?
Yep. And I think it was like 75 bips or something when 2020 before like pandemic happened and they just lowered it to zero overnight.
Yeah.
It got rid of the reserve requirement.
Yeah, they just started a tiny hiking cycle, didn't get anywhere.
Right. And that's why I was like, that's why when 2020 happened, I was like, they're never, ever hiking rates ever again because they've tried and tried and tried. And it's like, they can't, they're hooked. Well,
we listened to last year's episode just a minute ago, and we were all harping on they couldn't put us anywhere towards a deflationary spiral by raising interest rates. So I think we've all been caught off guard by how quick and deliberate they've been. And good on them, because frankly, I have to say, like, I don't think any one of us would agree the Fed in their current form should even exist. So, the mistakes go back 100 years, but, really back to like Greenspan, I think lowering interest rates before the dot-com bubble, into the dot-com bubble, I would say that's when the mistakes really started. And then you had Bernanke, and it's just been like error after error. But if you just were set in Jerome Powell's position a year ago, I don't think he could be doing any better given the current circumstances. Now, that he was also late to raise interest rates, so it's also on him. But I think I'm sort of impressed at how serious they've been. They're not listening to the stock and bond market. They're just raising interest rates because they think that's what's going to save the dollar. And good on them for trying.
Well, the stock and bond markets are both screwed if the dollar's, the dollar world reserve currency status is what makes our capital markets so attractive to outside investors. So I think it's like a derivative in a way. Like, if the stock and bond markets are not healthy and functioning if the dollar is not, the monetary system itself that underlies it is not healthy and functioning.
Yeah, I think you kind of have to separate out like the percentage of the world using the dollar, which is by definition its status as a world reserve currency, from like the happiness of the American people. And I think those two things were like easy to manage together for a long time. And now they're like kind of no longer. It sort of seems like Jerome Powell's like, he would be open to really crashing the stock and bond markets right now.
He would like
because
that.
He really wants to make sure, it's like he's militarizing the dollar because there's...
He does seem to be doing that.
Russia's militarizing oil.
It's somewhat working, at least to this moment.
I think the Fed was too slow to respond to rising consumer price inflation. They were still buying like mortgage-backed securities when the housing market was soaring.
Right.
Yeah.
And then they were too late, and their credibility had never been lower. Their transitory inflation, it was ridiculous how, now they say, oh, nobody could have seen that coming, blah, blah, blah. And like people saw it coming. Like mostly it was Bitcoiners and a ton of people on Twitter saying their policies as well as the fiscal policies, right? It wasn't just the Fed, it was stimmy checks combined with the Fed policies, but they were too slow to react. And now it's just a whiplash effect of being too slow and now being super aggressive.
Isn't this exactly why like we can't have policymakers doing this stuff? Because there's this sort of lag that's just built into it that is going to cause policy error because they can't quite grasp they're not able to measure the effects of it until it happens. Like maybe you told me this, somebody was like, economics, they call it like a science, but like it's not a science, because with science you can run tests, and if it doesn't work in the test, you don't run the actual, you run experiments before you like actually do the thing. And with like economics, like you can't run an economic experiment and like get results that are conclusive to anywhere near like what the actual results will be in practice or in play. So it's like, the Fed they think that all of these things with the interest rate policy will like do something, whatever their expectations are for the economy, but they don't know.
Yeah.
Because they can't run any tests. Like
you almost can't even go back and look at what happened almost. Like you can look at the economic data today and come up with 4 compelling narratives for what just occurred, like throughout COVID. Like that's a thing that I don't get. Like
it was aliens.
What?
It was aliens, dude.
Oh yeah, the aliens did come out.
This turned into Alex Jones podcast.
They snuck that in.
But no, I think so. Are you saying like you can like, with the power of hindsight,
it's such a complex system that of course it's not a science. It couldn't ever be.
Which is why like they shouldn't be doing it at all. Like I guess the counterpoint to Steelman, this would be like, well, Bitcoin is rearward adjusting as well with the difficulty. Like it doesn't forward adjust based on what the expectations of the economy or the block rate will be. It looks in the rear, but the rear adjustment, the difficulty adjustment that's based on backward looking data affects the forward looking difficulty. So in that light, it is the same, where they're looking at economic data, in this case the Fed, and making a policy based on past data, which will influence the future. But it's different now because the economy is in a different place. People have different preferences. Working from home is a thing now, right? Like, so in that way, like Bitcoin's difficulty adjustment is a bit more like pure, I think, because
it's definitely pure. It's math versus humans.
I need the shirt
doing that.
Pure mathematics.
I just, you asked, inflation doesn't seem to be coming down, and I think that in this CPI inflation or consumer price inflation is a function of a lot of things, and there was actually real supply side constraints.
You wrote about this in one of your articles.
Yeah, I mean, like them raising the price of interest rates, is that going to fix the fact that there's actual supply constraints or disruptions in the supply chains?
Could hurt that.
It could hurt that, right? And so, yeah, we're not seeing, and they say that in their speeches too, right? They're like, we're not going to change, the price of energy. We can't control the price of food, and so, like, what are they doing exactly, right? And so, I don't think it's surprising that we haven't seen inflation come down just because they're raising interest rates. So their tools aren't really effective here, but they only know one thing, and so they just think they're not raising fast enough. They're not raising
price of
high
money
enough, right? And so we're in this scenario where we have a Fed that wants to jawbone and be so strong now, when their tools can't even address the problem, because what would address the problem would be reinvestment in long-term projects. Right. That improve
nuclear pipelines.
Yeah, but we
improve
can't
energy
do that with
supply.
Such a high discount rate on the money.
Exactly. So that's why it would actually make it worse. And
damned
so
if you do, damned if you don't.
Yeah, exactly. So I think that's why we haven't seen it come down. I think we might not. It'll stay sticky longer than they think. And I think if you think about China reopening now and how that'll add increased demand for crude oil. Mm-hmm. Like we could see a situation where oil could actually spike in 2023 as China reopens, and that could have CPI inflation stay elevated despite the Fed raising interest rates as high as they want. Mm-hmm. So like they can't control these supply side dynamics, and so
is that a factor of global? Like if we were less globally ingrained, like if globalization declined, would that be a increase effect or less increase?
It's more complicated than that. Well, I just we're like dropping sanctions on Venezuela just because like things have kind of soured with Saudi Arabia. Like it's just a game,
Yeah, swapping dictators.
We're swapping dictators. We're just doing whatever and trying to form a narrative that aren't going to anger the people. And it's like globalization or no globalization. It's just like a game of risk.
Yeah.
Who's winning right now?
China, Russia. I mean, China's taking it pretty hard right now.
I think China's in a really tough spot right now.
Yeah.
Yeah. I think that could be the place where we see like a credit event happen, because you saw a ton of credit excess there.
In China?
Yeah, and their real estate market has been rolling over.
Well, there were all those riots and stuff about the lockdowns recently too.
Yeah, that was interesting.
I haven't seen anything like come out of the Chinese machine like that in a long time. Like that, I was like, whoa.
That was fascinating.
Well, I think the lockdown is not because of COVID. I think it's to stop civil unrest from occurring.
Exactly.
But
then why did the civil unrest occur?
Because I think they found out that the rest of the world had moved on from COVID. I think.
Oh, and they're like, we're still locked down.
And there was one, you can't really believe anything coming out of China. So take all this with a grain of salt. But apparently there was a apartment complex that caught fire.
Yep.
And they were closed off, their doors were welded or some bullshit. and people died, and that was kind of the straw that broke the camel's back.
People were like, "This is a civil rights issue now."
And then
like
I think
fire trucks couldn't get close enough to the building to put the fire out because of COVID restrictions.
And I think the World Cup, I think the World Cup actually, they tried to blur out the crowds in the Chinese streams of the World Cup so the Chinese population couldn't see that people weren't wearing masks at the World Cup. And I think that maybe people figured it out, and they were like, wow, our government's still locking us down for no reason. And that led to all these, protests and whatnot. But
earlier in the pandemic, I kept asking myself, like, does China know more about this virus? Like, because it almost obviously came from China. So, and they're pursuing these lockdowns to such an extent that it's like maybe they know something about this virus that we don't know, long-term effects or something. And that's what I was thinking earlier on. And then the more I've learned about China over the last couple of years, I think their idea of a functioning society involves these types of crackdowns, and the surveillance state has been in the work for decades.
Yeah. And
COVID was a perfect excuse to roll it out. And I think the region where that fire happened in the apartment building was the Uyghur region, like southwest China. And that's where they had already kind of built a surveillance state. It was like already built out. And then during COVID, they took that technology and spread it across all the other major cities. And so it's like they've just capitalized on this and kind of rolled out their surveillance state. And I think they earnestly think that that's going to be the best for their society long term. It's a totally different approach that us Americans don't understand very well. But I think that's more what's going on right now.
As far from my like reading about Chinese cooking and stuff, I've also read about like just some culture. And I know one thing that I've read in a couple of different things that like kind of seems like a common theme is that the like individualism, how we feel in America, like that, it exists.
Like a sin, though.
Yeah, but there's like, and there is. Yeah, it's like more. It's more about like the we than me.
Mm-hmm.
But we doesn't like. I think people in America are like that, but the we is like my friends, my family.
Mm-hmm.
It's not my country, right?
Mm-hmm.
Like,
yeah.
And I think that maybe, but it also could have something to do with like the way of like Chinese, like the Confucius religion, and like how like so many, and like the Buddhist religion too, like there's a couple different major religions in China, but they all are sort of this collectivism type of
I think it's more political than.
But don't political ideologies like stem from worldviews of how? I mean,
I think it's just internal collectivism versus individualism, and there's communism.
But like
China
it wouldn't
right
work.
now.
It wouldn't work. But like it works in China because like most of the time they're not revolting in the streets because the idea of like individualism is not as important in their culture. Now, like whether that's something that they've been brainwashed to think, or just like is handed down through tradition, that I'm ignorant about. But like
I also think things have gone so well for China over the last 40 years. It's really easy to feel when everything's improving all the time. And now that things are finally not improving, maybe that is a little bit harder.
It's easy to go with the flow when things are good, right?
Yeah.
Wait till shit hits the fan and then see how much they like the we. Well, but then
But China, what you were saying, like the surveillance state. I mean, with the protests going on, basically you have this social credit system and these COVID passports. And we saw what the government will do with these, health cards or digital IDs. When protesters start to protest against government policies, they suddenly cut them off and restrict them from accessing public transportation, going to stores. Which is why, we have to push back against that kind of thing because you're seeing that kind of creep into the research of more of these international financial institutions and the UN and all these, like they're basically pushing these digital ID systems.
Right.
And that should be a blueprint and wake everybody up because, what do you do in that situation when everything's digital? And they just turn it off with a click of a button and say, no, you're sick now. You can't access the bus system to go congregate and protest
That's why I don't
authoritarian policies. So
that's why I don't want like a car that has like Wi-Fi. I mean, you basically can't get one without a computer, without all computers in it now. But dude, I don't want my car to be able to be remotely disabled by like, especially like transportation. Like that's like, 'cause then you're stuck.
Freedom of movement. Yeah.
Right. Like that's like a big deal. That's
a big deal in China too. I haven't read this full book yet, so I don't want to like talk about it too much. But I came across this book. It's called The Anthill, The Human Condition in Communist China or something. But it's really fucking interesting book because it's like protected by the United States government as a critical publication in history, and the book is allowed to be distributed and it should be protected under law. And why is because this French political scientist at the end of communist China in the 1970s went to Hong Kong, and there was millions of refugees literally trying to swim to Hong Kong, trying to escape communist China around that time. For anyone who doesn't know, out of all the genocides in human history, communist China is number 1. Number 2 is Russia, communism. Number 3 is the Holocaust. And so it was literally terrible there. And this French political scientist went there and did one-on-one interviews, first-hand accounts from over 50 people of all like peasants, people who worked as like soldiers for communist China. And the stories out of there are so powerful and draconian. And this is why like everyone should read that book, because it's impactful, and anybody who's trying to push any kind of collectivism or anything should read some freaking history, because it's like I said, I mean, it's not even close either. I think communist China, in terms of when Mao was president, or I don't even know what he was, but it's almost triple the deaths that happened in the Holocaust around the same time. So that's why it's like super important to push back against any of these kind of ideas, because it just leads to mass starvation. And
50s to the 70s.
Yeah. It's an incredible book.
It was a political and military ideology, Maoism.
Yeah. I don't know how we got into China like this, but you're digging it.
We're talking about globalism and trade.
Yeah, and it's like the next big thing right now. I think it's pretty clear Taiwan is in the balance. And
well, you made that great prediction about, well, it's not great, but you made an accurate prediction that Russia was going to invade Ukraine this year. Do you think that Taiwan can continue to maintain its independence?
You know what I think is going to happen eventually? I'm not sure if it's going to be in 2023. I think China is going to take Taiwan, and America is going to let it happen.
Going to let it happen.
Not only do I not think we'd beat them in the South China Sea, but we did promise them Taiwan during the Cold War. Not a lot of people want to talk about that.
We changed our mind.
We changed our mind. We reneged you can have Taiwan. But we did. That was before TSMC, obviously.
Yeah, that's why I don't necessarily agree. I think.
But I think TSMC is going to probably be manufacturing in Japan and probably be manufacturing in Arizona, and then they're going to break into two companies, kind of a West and East TSMC.
That's possible. It would take time, though.
Yeah. Well, that's why we're building all the foundries here now, right? I mean, it seems like the writing's on the wall.
Yeah.
At least over the longer term. I mean, it may not be imminent.
But I think if it happened sooner, before all that stuff was built out, I think U.S. military would flatten TSMC if China tried to take Taiwan over.
Oh my gosh.
I mean, why wouldn't we? Like, that's just military game theory. Like, we wouldn't let them take critical chip manufacturer or foundry over.
I know, but that's shooting ourselves in the foot pretty hard too.
Rather shoot both of us in the foot than allow them to get their hands on that. And I still don't think China's military comes close to the United States. I think, especially our Navy.
I think in that region, it's debatable.
Well, we got like aircraft carriers. Can we just float them over there?
we can get them there, but that's like where their whole military has been built out. They've invested everything in that area.
They're fighting on home.
I'm out of my depth too.
Well, I'm also kind of regurgitating ideas from Ray Dalio's Principles for Dealing with the Changing World Order.
Okay, gotcha.
Which is the book I read most recently. So yeah, I read it.
It's like 1,000 pages.
Yeah, I read it, and it's really, really good.
Like that motorcycle, dude.
It's pretty good. I think
you read it as well.
I think he believes. I think
Ray Dalio likes
he believes
China
in China like way too much.
He's so bullish on China.
Yeah, and I think there's problems in China. I think I talked about the credit excess and the fact that they could be going through a pretty deep recession here.
Mm-hmm.
They depend on us for food, so
they depend on a lot of other countries for a lot of things.
Yeah.
But that's also their soft imperialism across Southeast Asia and throughout basically all of Asia, the Belt and Silk Road Initiative.
Yeah,
I think that's going to be pretty successful. But I hate to be a China simp.
Are you a China simp?
No, I'm not.
China simp, dude.
Get him!
Literally been talking about communism for 30 minutes, and this guy's
I don't know how we got into this.
I think if they can get through this rough patch, and you're right, Sam, for them, if they actually have an actual recession, holy shit, that's bad, because they were growing at like 10% per year.
Right.
So it's going to be interesting to see how they get through the next 5 years, say. But
I think they're already in a recession.
Yeah, I mean, again, you can't trust the data.
Yeah, no, I mean, they literally didn't send their GDP data.
And then when they did,
I don't know, there was this amazing chart of the economic data that's come out of China over the last 2 years. It's like this. Like, they've literally just become more of a black box than they already were.
Yeah.
They're trying to hide the fact that that miracle is slowing down. Now, it's interesting because I was listening to an interview with Felix Zulauf. He said that there's about $3 trillion worth of loans made from American banks, Japanese banks, European banks to China. So if a credit event happens in China and their real estate market rolls over even more, then that could have contagion effects and actually result in
the Fed needing to bail them out.
Exactly. Like a Fed pivot, essentially. You'd have a correlation to one event and bailing out the banks again because of China. Mm-hmm. So you don't know where these credit events will happen, but China has taken on more debt than anybody over the last 10 years. Mm-hmm. And they shut down their economy. I mean, they're still locked down. It's crazy. Mm-hmm. It's literally crazy. So I think there's a lot of risk there. And I don't think China is as strong as people think, but I understand why people think that.
Strong as I think.
I think America's strong. I think America's stronger than people think.
For sure.
There's geographical reasons for that.
We have innate advantages, geographical resource.
Mm-hmm. Exactly.
And so that's going to, and we're also, I think, the kind of the center of the freedom backlash that we're likely to see across the world.
Yeah.
Yeah. Yeah, it will be based here. I mean, although I feel like America's softened a lot, like the population has kind of softened.
We haven't had serious things to worry about.
Right. And it's like we were saying earlier, like with China, it's like we'll see how quick the we lasts when things get really bad. Exactly. Right. So
have you guys seen the documentary on Netflix? It's about a factory with China.
Fuyo.
Yeah.
They made the glass, the windshields, and
one of the best documentaries I've ever seen.
You didn't cancel Netflix?
It's called American Factory.
It's called American Factory, and it really highlights the difference in culture between Chinese individuals or people and
factory workers, like American factory workers.
Yeah, it's a fantastic. I think it was nominated for an Oscar or something. Like, it's an incredible documentary.
Newer one?
A couple years ago.
Oh. Yeah.
Hey, check it out. It's incredible, and it really highlights the differences in thinking.
Juxtaposition.
Yeah, very stark difference.
Sure. Yeah, like the American executives go over to China and they celebrate and stuff. And why are all these kids dancing
for us?
What was
it, in like Indiana or something like that?
It was like Ohio, I think.
Or Ohio. Yeah, dude. It's just like these Ohio people who are just like, what? Like, there's like, they bring in these Chinese workers, and the workers are like working 12 hours a day, weekends, like literally just like bringing the Chinese work at like culture. Like we do not take breaks. Like we don't do things. And these Ohio people are like, what the hell is going on here? I'm going to go like clock out at 5. And, you
right.
know.
And go chill.
Yeah. And it's a crazy documentary. I'd recommend it.
They're lying.
American Factory.
American.
Yeah. Well, I mean, there's one of China's advantages. Productive society.
Work ethic.
Yeah. And they've been building infrastructure.
To who? The state or the
individual? To the state. No. Definitely not the individual.
Yeah, not the individual, man. Those people in that documentary see their family twice a year, maybe.
Oof.
Maybe.
Who needs that?
They work 363 days a year and don't see their wife and kids. So, yeah.
All right, I'm done simping for China.
All right.
We went off on a tangent there. I love it.
Quarter 2. Well, actually, this topic I'm looking at staring at me. Hey guys, Elizabeth Warren is hell bent on turning USA into China. We'll save that. That's Q4. That's cute. That was like a couple days ago. Or that was yesterday, wasn't it? The bill that Warren put out. But we'll go into Q2. You guys want to pop this bottle? Because we got a steady lads here.
Yeah, let's do it. Why not?
This is a groovy dry secco. It's a.
You done with alcohol again?
Yeah, it's been a while, but it's a non-alcoholic wine.
What the fuck? Shoot it right.
Yeah, just don't shoot in the camera.
I mean,
well, you
where
can
do I
just
shoot
twist.
it?
Just don't. Just open it. You don't have to You don't have to fire a projectile. You can just open it.
Ooh, opa.
That was a fun start.
That's my favorite champagne.
The lady was like, "Oh, you getting the non-alcoholics and this one?" And I was like, "Yeah, it's for guests." And I was like, "We're recording a year-end podcast today," and she asked what the podcast name was. So I told her, Value Stack Podcast. I said it was an investing podcast because I don't tell people it's about Bitcoin anymore.
Why don't you tell that?
And then she said, "Oh, what stock should I buy?"
Bitcoin's still
and I
up.
said, "Oh well, actually, it's a Bitcoin podcast." and then I started to back my way out of that conversation as quick as possible because I just can't orange pill people anymore, dude. I can't do it.
Oh really?
I want to deep down, but I got just so much backlash last year when it was going up, and this year I've gotten a lot of like, I knew I shouldn't have listened to you. Now that it's down, and I'm just really? Like, dude, there's no. I mean, the gain is that hopefully these people have sovereign money that I care about, and like they do well because of that in the future. But short term is like not worth it, dude. I mean, like if somebody truly asks, like I'll tell them.
Every time somebody asks me about it, my advice is always the same, which is think of it as a long-term investment. That's what you can't afford and to lose. And so I don't feel bad at all for telling anybody about things because I've always held the same advice or gave the same advice. And
dollar cost average. Sam's advice.
Yeah,
there's not. But like people don't want to like long-term investment. Like they want to get rich quick.
Yeah, well, fuck them.
Right. Well, that's what I'm saying. That's why I don't give them advice anymore.
No,
that's literally why I don't give financial advice anymore.
It's just. I don't feel bad telling them to buy Bitcoin at all, and I still even that it's down from the all-time high as much as it is, like I still think back to like March 2020 and it's outperformed basically everything since all this garbage happened. And it's a symptom of short-term thinking. It's actually done very well over 2 years. So I don't
know. I guess.
Am I crazy or
no? If you bought in December of 2020, you were down.
I also think if you take,
I'm talking about March 2020. I'm talking about
that's 2.5 years.
Oh yeah, I guess you're right.
It's almost 3 years.
Wow, that's crazy.
Dude, time's flying. This is 2022 year end. The year is over.
I guess I see that as a line in the sand. Yeah, I see it as a line in the sand, March 2020.
It was, but it was. I don't know. We got to talk about March 2022 because this is
okay.
Q2
We can cut this.
No, it doesn't matter.
No, Beau's back now. But let's get into it.
What I'll say about orange billing people, if you have a little bit more time and you can like talk with people, depends on who you're talking with. Cashier, probably no, but like your aunt, maybe.
She seemed genuinely interested. She said she was going to listen to the episode. So I believed her.
I think
maybe you got a new subscriber.
I think you can take time and explain it to someone that like, maybe this is a poor analogy, but like Amazon's dropped by 90% in its history, right? Like 2000 to 2002.
Amazon, yeah, I guess so.
Multiple times.
And if you talk to someone at the peak of the 2000 bubble and told them to buy Amazon, you'd feel like an idiot.
Yeah.
But if you talk to them in 2002, and then looking back in 2015 or 2022, you'd feel like a genius talking to them then, and that's now.
So the takeaway is don't tell people to buy things when they're at all-time highs.
Tell them the dollar cost average and be prudent and tell them what they're buying, and they have to understand what they're buying if they're going to continue to do it.
Here's where I always get in trouble, because I agree with you, but also the reason I'm bullish on Bitcoin is because I'm bearish on the dollar's long-term integrity of purchasing power. So why, if someone has cash in their savings account, would I tell them, oh yeah, DCA it into Bitcoin and like slowly bleed out until you get it all into Bitcoin, instead of like just stop the bleeding right now? That's like where I have that trouble.
It's exactly what Sam was saying on last year's episode. It's that emotional component. If someone's DCAing into something that's going down, they can feel good about the fact they didn't put it all to work, and they are able to purchase more sats with the same amount of dollars every month, right? But if it goes up and they're purchasing, well, they're going to be happy it's going up, right? So you manage it on both ends if you're dollar cost averaging. If you're smash buying and it goes down, emotional. They could sell at the bottom. Yeah. If they smash buy at the bottom and it goes up, well, oh my gosh, you did a 1 in 1,000 type of thing. But that's not to be expected. There's going to be volatility, and I think dollar cost averaging is a great way to manage people's emotions.
Yeah.
Regardless of outcome.
It's true. I mean, like you do take the longer perspective, and you wind up buying less at the top and more at the bottom than you probably otherwise would.
And most people are probably fine with that.
Yeah, that's true. Cool. Well, we covered Q1, I guess. Q2, my favorite moment was Steady Lads deploying more capital. I believe that was, I actually think that it may have been
Do Kwon?
Yeah, no, I know it was Do Kwon. I was saying like it was a very it was like the last day of the quarter. It might have like June 30th or Steady Lads. Let me look it up.
No, that was
that July?
Early May.
Was that May? Damn.
Yeah.
How long ago?
Yep.
Been 2 years since May.
Wow. Steady Lads, May. Unbelievable. Deploying more capital. Well, that didn't work.
No, it didn't.
So I guess for those who are watching in the future, what kind of started the whole unraveling of this year? I mean, really it was what we mentioned in first quarter. BlockFi got caught off sides playing the grayscale arbitrage along in 2021, and it just kind of got worse and worse. Deeper and deeper hole that they dug, and then guess they got some loans. I don't know. A lot of people it's like the Spider-Man thing that everybody's pointing at each other,
Yeah.
But essentially, like at a certain point, somebody figured out that Anchor paying 20% APY on a stable coin,
risk-free
was not, in fact, risk-free, and that Luna's ascension from a penny to, I think it went to, what was the high, like $200 or something. Like it was just absurd. I don't remember exactly what the high was, but
I think it was a transition from free money to no longer free money, which we've already touched on, and the mentality of free money to no longer free money. Like I think that's really what actually started it all.
Mm-hmm. And they weren't even U.S. Like they were like Anchor and all that was all big in
Hong Kong,
Singapore.
Yeah.
And a lot of people had a lot of savings in there. So yeah, essentially there was this DeFi protocol called Anchor that was built on Terra, which was built on, which had a stable coin and a non-stable coin called Luna and UST. And they were like, I don't know, some kind of financial alchemy. It blew up, shocker. And they caused like a massive bank run on anybody who basically had any. That motorcycle, dude, they're so loud. It had it basically caused a bank run on like anybody who had any kind of business relationship with them, right? Genesis, Celsius, Voyager, like I don't even remember the chain of events. It all happened so quickly. It seemed like it.
Well, Three Arrows Capital had a huge exposure to Luna, and then when Luna crashed, which was, I mean, we're talking about $50 billion that were wiped out in days. And it was a classic example of a currency peg, fixed currency pegs. And those always fail throughout history, even when it's central banks trying to do it.
Mm-hmm.
Right.
I mean, they just don't make sense. There's a trilemma there where you're inflexible with how you control the peg. And so it came under attack from speculators once that peg broke. And the peg was to the Luna. So it was just like a machine where you had UST, the ink, or
It was a death spiral.
yeah, it was a death spiral. It was a death spiral. So it was Luna and Terra. And then once Terra broke the peg, it just caused more price pressure on Luna and vice versa.
Right.
And then they both tanked. And we're talking about $50 billion in days wiped out in value.
Okay. Do you think the theory that Sam Bankman-Fried was behind that, do you think that's unfounded or
I think that's irrelevant
irrelevant?
because it was bound to blow up.
It was
anyway.
bound to blow up at
So I
some
don't really
point, but
care
wouldn't
if-
it be funny if he was involved in that and eventually led to his downfall?
Well,
Maybe.
I read that like the whole pump in 2021, the double top pump was like all FTX manipulated. That like, you know how we got like the first run up in
Like May,
April, and
Yeah.
then like it crashed in the summer,
Yep.
and we went to that
the new all-time high in
the
November.
sandwich shop, and we were like, "Bro, is this it?" Like, did we? And then like it immediately came back, like, and we were like,
Yeah.
"Buy the dip, wins again."
Yeah, that's
This year
second.
it didn't
That's
work
second
out.
all-time high pump.
It was fake, you
Very.
think? It's very short lived.
I mean, the whole thing was driven by leverage in hindsight.
Right.
I mean,
All of it.
but I think it comes back to the GBTC premium trade. But once that flipped, all these entities, hedge funds, started to go into riskier assets like Anchor
right.
to try to make up for that lost premium trade. And then
And that was something that happened in Q1 too. Grayscale wasn't. I think it was Q1. Grayscale applied to be a ETF, and they got rejected.
they
Or was
did
that
get
Q2?
rejected.
Maybe it was
Seems
Q2.
like they've been rejected a few times this year.
Or the most
Yeah.
recent one, but I think maybe it was Q2 that happened. But they sued them. They sued the SEC this time. They were like, "Yo, this is BS. We're suing."
Right. They sued him.
Grayscale.
They sued him
sued-
because the SEC approved.
June 30th, the last day of the second quarter,
Yeah. They sued him because the SEC,
over the rejection of the application.
the rejection of their spot Bitcoin ETF or the conversion of GBTC to the spot Bitcoin ETF.
Right.
After they had approved a CME futures ETF, which is bullshit because the CME futures ETF is supposed to track the underlying spot market. And the reason the SEC rejected the ETF was because they said there was too much fraud and manipulation in the spot market. But
Were they not wrong?
Yeah.
they're not wrong, but why would
It
you
was all planted.
approve a futures ETF
And not a spot.
or not futures futures ETF.
Yeah.
If it tracks the underlying because it's actually more prone to manipulation.
That's right.
Because
The
you look
CFD.
at the lead lag analysts of the spot market and the futures market actually leads the spot market.
Mm-hmm.
And so if anybody wanted to manipulate things, they would actually probably do it in the futures market. And so it makes no sense whatsoever that they approved a futures contract and rejected a spot Bitcoin ETF.
Mhm.
And that's why Grayscale sued them.
Mm-hmm.
But they just actually responded. The SEC just responded to them and said basically a bunch of crap about how, they're wrong and we were right to reject it, blah, blah, blah. Because you're right. They do have a lot of ammo now that there was a lot of
Right.
manipulation going on. But the fact that futures product exists is bullshit. And they even approved an inverse futures.
Right.
So it doesn't
Yeah.
make any sense.
Well, it sounds like because that's all regulated by the CFTC, the whole futures market.
Mm-hmm.
So I don't really understand where I would go with that. But if they knew an ounce of what was actually going on in the whole wider crypto space, then I think they were probably right to deny the spot Bitcoin ETF. At the time, I thought they were totally wrong.
Right.
But just watching, you're right, all built on leverage and just.
It's been,
I think they were
carnage.
completely wrong to not approve a spot Bitcoin ETF because it allowed the GBTC premium trade to happen, which all these players did with leverage.
That's a good point.
Terrible collateral.
So they caused it, basically.
And then once that closed and went into a discount, those players took all the leverage and went into Anchor and Luna, and it could have made everything. It wouldn't have stopped the leverage because this was also a function of the easy money environment from the Fed. But it might have minimized the damage.
Yeah.
And it might have protected GBTC shareholders who had to suffer now through a big discount just because it's a faulty investment product. So if they wanted to protect retail investors, like their mission statement says, they would have approved a spot Bitcoin ETF. And, you know, it's political at this point why they didn't do that. But you got to understand, like Terra Luna was playing that GBTC premium trade. And then once that closed, they took leverage from Celsius, Voyager, BlockFi, Genesis
to
make up for it. And they threw it in Anchor and DeFi yielding protocols to try to make up for it. Once Anchor and Terra Luna crashed, wiped out Three Arrows Capital, it was only like weeks later that Voyager filed for bankruptcy, Celsius filed for bankruptcy, BlockFi got bailed out by FTX
temporarily.
So like that's why I say like a lot of this comes back to GBTC. And if there was one person or entity that could have stopped that, it would have been the SEC approving spot Bitcoin ETF.
So
thank you.
Yeah, that was a good.
That makes sense.
Good take. Yeah, I mean, and I guess to add insult to injury is like, and you see like Gensler like in several photo ops with some SBF, like throughout the year,
Okay, yeah, let's talk about that. What was going on there? Because now they're charging them and shit. Like they knew all this shit was going on, and so what was Gary Gensler doing, buddying up with SBF?
I think he probably was hanging out at those polyamory parties, if I had to guess. But
Gary Gensler's kind of hot.
What? in an old man, like I bet you he's got some wisdom type of way, I guess.
You're right, man. I don't know, man.
Oh man, no. I mean, I don't know. I mean, they're probably all like it's like Sam said. It's all political. I mean, dude, even SPF came out and said that like his Republican donations weren't non-existent. They were just dark, you know. So it's like so much rhetoric and like it's not just like what you do, but like what it looks like you're doing, or like how the appearance of your stance, not just your actual stance, you know. So.
And SBF admitted all that.
He's playing both sides, right?
He basically came out and said we were like pulling the whole like carbon neutral shit because we thought it would.
I mean,
they're just
the same thing. Gensler
playing the game.
Well, I mean,
there's one true thing he said.
To me, it sounds like Gensler's doing the same thing because on the one hand, we had Coinbase, which is like still under investigation for like all these unregistered securities that they're selling. He also like went, hand to hand with BlockFi and was like, "That's a security." And yet he's like, FTX, like the biggest offender of them all as far as like, following the rules. So it's like, I don't know. I personally, and this is a personal belief, I think Gensler needs to step down.
Yeah, I think he should get a ton of heat because Representative Tom Emmer and, bipartisan group of politicians wrote a letter in March 2022 asking the SEC to explain their oversight of the cryptocurrency industry and how it was extremely disorganized and ineffective. And he basically asked Congress to investigate that and call them in front of Congress and to testify about their processes with the cryptocurrency markets. And Gensler just ignored it and nothing ever came from it. So it's obvious that he wasn't doing that. So
I like when I first started learning about Bitcoin on YouTube and all, like in 2017, like his courses are on there, like MIT. Like he used to teach like the Bitcoin course
on like
at
iTunes
MIT.
University.
Yeah,
you can watch his MIT courses.
And it's like, dude, the guy isn't ignorant about Bitcoin. Like he knows.
It was pretty funny when he came on as
we were all
SEC
excited.
Chair. Yeah, everyone was like, "Yeah, Gary Gensler."
Because he taught the Bitcoin course. I thought he was going to be good for Bitcoin.
I think Gary Gensler is looking out for Gary Gensler.
Yeah, it seems like it.
Yeah, he's not
be Treasury Secretary one day, and
he's not Chinese, so there's no collective we that he's thinking of.
Yeah, well, and
oh, speaking of hot politicians and Treasury secretaries, can we talk about Janet Yellen?
Oh.
Okay, sorry.
Oh my God.
Wherever you were.
No, I was gonna say that there has been a mass dissent at the SEC under Gary Gensler. There's been more turnover, and apparently it's an awful place to work.
You don't say.
Grueling hours, like people have been quitting left and right, and so it sounds like they're both ineffective, and then working under him is hell. So I think Gary Gensler deserves a lot of blame for this, personally.
Nothing worse than an ineffective, shitty boss.
Yeah. I mean, yeah.
Usually you get one, but both.
Yeah.
Yikes.
Fucking Gary Gensler.
What else happened in Q2? So we had the blow up of Terra Luna. We had the anchor. I guess that was all kind of connected. Celsius said everything was fine. Assets.
Oh yeah, Celsius. That was interesting.
Celsius, Voyager. Oh, Voyager had that unsecured loan.
Yeah, Voyager basically gave 3 Arrows Capital. They're just like, hey man, here's $700 million.
And that was a publicly traded company
in Canada. Yeah.
Yeah, Celsius too, man.
Vault.
They were like coming at
one.
Swan, and they were saying,
they
were like saying,
don't hold your keys. That's how you lose
your keys.
Bitcoin.
Like Bitcoin maxis will tell you to self custody your keys, and you'll lose them all. You should hold it with us, and that should be a red flag to every single person. When anybody says don't self custody, keep it with us. It's safer with us. That's a huge red flag. So that happened, and now I don't know. I actually don't know what's going on with Alex Mashinsky. Is he like,
dude? I don't know.
Is he gonna get like charged with something? Has that happened? I can't keep track of all these scammers.
Apart,
honestly,
when that thing fell apart, I thought he's like the worst criminal in the world. I couldn't even fathom that SBF was doing this
even
shit.
Worse.
He makes Mashinsky look like a saint.
Like yeah.
And 3 Arrows Capital, don't forget about them.
Dude,
now 3 Arrows Capital is tweeting like we should just forget about their fraud,
right? Like
because there's a bigger fraud.
Like each fraud this year has gotten more and more severe.
Yeah,
it's ridiculous.
That's why everyone's looking at Binance now. They're like, yo, it's like all those like Russian dolls that are
exactly.
Yes,
bigger,
exactly.
It's like, is there another one with CZ's face on it?
There is. And then there's like Gary Gensler's at the top of all of them.
Yeah.
Vitalik.
Well, I mean,
maybe Vitalik. That's
Q2 had like a lot of build up stuff, right? Like, I mean, it was, I feel like really it was like the end of Q2.
Yeah, just to kind of like paint a picture. Like if you look at how risk assets traded this year, there was a pretty big bottom in June.
Right.
And then a pretty big bottom in October. And those are kind of the big bottoms of the year.
So Q3 was like sort of a temporary recovery, if not relief, at least, because it sort of hung out at the 20s. And
Quarter three started off well and ended poorly.
Right.
And quarter four started off well and seems to be ending poorly.
So Q3, I remember, was like the increasing, like the rising, just the hash rate just kept climbing. The miners started. That's when the mining pressure really started.
Yeah.
To become evident. So like Q2, we had all of the actual, like Q1, call it like the sort of the warning signs. Q2 was the actual failure of several of these big institutions. And then Q3, we sort of stepped back and we're like, all right, let's see where the dust settled and like what's left. All right, maybe that was the capitulation event, right? Okay, then the miners start having big trouble. Oh, okay. Core Scientific is now selling like all of their Bitcoin that they've been hodling, and some of the other, large miners too. Meanwhile, hash rate keeps climbing. So I think like Q3 sort of got a reprieve a bit, right?
Mm-hmm. Well, because the miners sold a lot of their Bitcoin in Q2.
But it was right. Was that Q2?
Yeah, it was Q2. That was core. That's why I think that actually marked the price bottom when all these miners started dumping their reserves. And then Q3 was when they didn't have the reserves.
What happened over there?
They didn't have the reserves anymore, so you started to see capitulation. You started to see a couple of bankruptcies. Started to see these miners really start to struggle, and you just see that in the public miners' stock prices.
Oh yeah,
because they were hit with like the triple whammy, right? They had increased hash rate,
increasing electricity costs,
exactly, and
decreasing
dropping Bitcoin price, and they're still under it right now. But Q3 was when that stuff really started to hit the fan, and they need the Bitcoin price to go up yesterday.
Yeah,
dude, but, it's not even like if you have more than 10 cents kilowatt hour, you're literally mining at a loss with a brand new like a ASIC, new gen ASIC, like not the newest like XPs, but like the S19, like 100 terahash.
Yeah,
you're literally mining at a loss unless you have like.
What do you
6-7 cents or something?
I go to that brains calculator every once in a while, and it just kind of blows my mind.
And I'm like, I'm not going to be a miner this month, I guess.
Yeah,
maybe next month.
Q3 was like the hash rate though was going up, and that just added pain.
Right.
So what do you think was the hash rate increase? Why do you think that happened?
Well, I have a couple theories. I think there's a good chance that Russia is mining Bitcoin and not telling anyone. One of the things that did happen was that I guess we didn't really talk about yet was the sanctions against Russia that happened in Q1, which affected a lot of the Bitcoin mining companies like Compass and Bit River. I remember is that one Russian hosting.
Oh yeah.
So like I don't know where those ASICs go. So I don't know.
To the Russian government.
Yeah, I think it's a good, and they have zero. I mean, first of all,
free electricity.
They can print money, so they can print their own currency. So like their cost of production is essentially zero. I mean, yes, they have to use their finite resources, but they have more of them than most of the other countries on Earth, and it's extremely cheap. They have the infrastructure already, so good chance that like a lot of that hash rate got repurposed to Russia, who's like price agnostic, where they're not in it to flip for a return, they're in it to claim some stake in the future reserve currency that may take hold. So if that's the case, they're never going to unplug. Price could go to 5,000 a coin, 2,000 a coin, hash rate keep climbing. They can stand the pain longer. They have the lower, operating expenditures. So I think that could be one thing that really increased in Q3.
What do you think, Sam?
I think that's possible. I think a less sexy answer is that a lot of these miners just made a lot of investments in like way back in the bull market.
They started getting delivered finally.
Yeah, exactly. Like it was just delayed to set up the infrastructure and get the delivery of the machines.
Marathon, yeah.
So we're talking like a 12 to 15 month delay. And they finally got them, and it still made sense for them to plug them in. So there's that. It's just, I think that happened. I think the S19 came on. They finally got delivered. And then I think that Ethereum moved to proof of stake. I think all these ETH miners basically had all the infrastructure and mining facilities in place.
Just not the ASICs.
And the ASIC prices were really cheap. And so what do you do if you're an ETH miner? Suddenly you got to do something.
You know how to mine.
The obvious thing is to buy cheap-ass Bitcoin miners and plug them back in. So you're actually seeing these old ETH miners plug in Bitcoin ASICs.
Just like using the same electricity wiring,
everything. They basically had empty rack space, and they had to put something in there, and so they plugged that in. So I think both of those things were big factors into the increased hash rate in Q3.
Our buddy JJ sent me a conspiracy theory that China is still mining a bunch of Bitcoin, but like the government's involved.
They still have like 20% or something.
Is he also a China simp?
Shit, I did not mean to do.
You have a group me? A little Telegram group?
I want to visit China. I don't want to get arrested, so I'm putting this out there.
SBF has a Telegram called Wire Fraud. You've got one called China Simp.
Sorry for the theme, boys.
This guy, man.
Value stack 30, China simping.
But I do, yeah. I think
Beau and
the
Sam.
Russia thing's possible, like, sure. But I do think you can actually see that in the public filings and public companies.
Now that you say it, I think you're right.
Mining was just so in vogue 6 months, a year ago, I mean, remember, like, that's when I was getting into mining. That's when Peter McCormick's podcast was mostly about mining.
Now,
and it was at the worst
about
time.
Mining, so it's even worser time now.
I mean, mining, you got to know what you're doing, man. I mean,
you really don't. You just have to be lucky.
You think so?
I mean, I
think you kind of got to know what you're doing.
I've had 5 different people in the mining industry on the show, mostly back to back. I think I've learned a lot about mining. I'm basically an expert now. Actually, that's a reference to Rob Warren's episode. He says there's no experts in Bitcoin mining, and if anybody says they're an expert, you should run. So,
really? Okay.
So it's only been an industry for a few years. How could somebody be an expert at it? I completely agree with that.
I think there's like, you just got to understand the math that goes into, like I can't just like plug in a miner and like maybe I'll make money.
I don't think it's as much about like running calculations as it is like being creative. I think where the real opportunity for Bitcoin mining lies long term is in and from the podcast I've learned is in sunk costs and using the waste heat, waste energy.
Exactly.
That sounds like you got to know what you're doing.
Because they're fair enough. Yeah, fair. Like there's like, if there is already a cost associated, then replacing that cost with a Bitcoin machine, as long as the OpEx, as long as it'll break even over time, the CapEx is pretty much irrelevant because you're going to need it anyway. So
yeah,
it's
Troy Cross, his recent episode on what Bitcoin did. His couple episodes on what Bitcoin did. I highly recommend those episodes, but he talks a lot about that, about how in the future he imagines you have to have externalities that are giving you a profit based on the heat or based on other things that it can do.
Right.
You need to already be having he used carbon capture as an example. If you already have high powered fans for carbon capture, then why not use those to cool ASICs at the same time? So like little things like this where basically, or, co-located with a whimsical windmill farm, right? A place where the wind either blows really hard or not at all. Like that's a great place because your electricity is free whenever the ASICs are turned on. So like that's kind of what you need to compete like 40 years from now.
Well, so like one of the people that are coming on the show, Colin Arceris on Twitter, you guys probably know him though. He runs Distributed Hash. It's a hosting facility. And he was saying that like there's people who heat up like hotels and stuff with like boiler rooms, like hot water boiler rooms for hotels with ASICs, and it doesn't take that many. So like that's a business operational cost that you're paying to keep your hotel hot water. Like that's a fixed cost or variable cost that you're operating with, and you already have that plan. So
I love loud hotels.
Yeah. I mean, you put it in the basement, dude. But another one, so another guy coming on the show soon, Crypto Cloaks, Rick. He they had that like rip off heater, the FutureBit heater. It's like $1,500 for an S9 or something, and it looks cool, but it's like you will literally never break even because it's so expensive up front, and they don't even mine at a profit. But Rick was like, all right, cool. I'm going to build this Crypto Cloaks heater in like 3 days. And he's got one. So now he's built it. So like that, like, okay, if you have a 1,000-watt space heater in your apartment, why not have a 1,000-watt Bitcoin miner in your apartment if the decibel readings are about the same? And I think he said it was like 40 decibels, 40 to 50 decibels. Do you guys know how loud that is? I have no idea.
Can you?
It seems like it's like a white noise machine.
On the microphone, let us know.
I mean, it's probably about
Maybe
as loud as that dog fart.
Can come fart for
It's not as loud as a dog fart. 40 dB is a quiet library.
Well,
you can sleep in that.
No,
it's a
that's
white noise
cool.
machine.
That's cool.
It doesn't really make any money, but like you're not turning heat on to make money anyway.
I think my
you're
favorite
turning heat on so you don't die.
repurposed heat was they put it into a greenhouse and they
That's
grew
awesome.
flowers.
Mm-hmm.
And
that's cool.
Like tulips or something.
Grew tulips.
Full circle.
Yeah, full circles, and they sell the tulips
for Bitcoin.
Bitcoin.
They're both worthless.
You can get creative, man. You can get like a cheap source of energy somehow.
Hydro.
Mine Bitcoin, and then grow flower,
Grow flour. Maybe, dude, that's a new, you know, I got into a milling. Oh, dude.
Cash crop.
I got into
and then buy Bitcoin with the proceeds. That's what we call a circular.
That's what we call a circular. The circular of life.
That's a business model right there.
Yeah, edit that part out. That's just for us.
Yeah, this is for us.
No, I'm probably not going to edit anything, dude. It's going to take so long just to adjust the volumes on all these. You know, so this, looking at this strategic petroleum reserve is one thing.
That's interesting.
It's really been more of an all-year thing, right? But
yep.
We'll just throw it in here now. It seems like a good spot to throw it in. And then I got to check the camera footage in a second, make sure we didn't go over. Yeah, so this chart looks crazy. Like, this is like cataclysmic. I think you used the word carnage.
Oh, yeah.
But that looks real bad.
So that's the SBR. I don't know what the x-axis is. Sorry, the y-axis there, but
y-axis is time.
No, the x-axis should be time.
The x is the millions of barrels in the strategic petroleum reserve. So basically, we went from 650 million barrels of strategic petroleum to about 400.
6 to 4.
Yeah, so about 30-40% decline. Looks really bad on the chart. I mean, you know, over the last 20 years, we've had about a 30% increase. So we just wiped off the 20 years of accumulation and inventory in 2 years a year. So I don't know what that really means. Do you guys?
It means
we don't have oil.
Biden wanted good results in the midterm elections. He got those, and he's going to probably continue to deplete it leading up to the next presidential election.
So tell me if I'm understanding this right. So the strategic petroleum reserves, like reserves of petroleum that we have for strategy purposes. So one of those strategies might be like
alpha, man.
So
pure signal.
No noise here on Value Stack. So one of those strategic things might be like, you know, fighting a war that against like the world's largest petroleum producer. Do you think that this is a like preemptive mistake that we are making from a policy standpoint? Because like if we're about to go, you know, duking it out with Russia, who controls a lot of the world's global petroleum reserves, like shouldn't we like probably keep our reserves good? That way when we need them, when shit hits the fan, we don't not have them?
It's
or might not.
I think it's a ploy to strengthen the dollar or to maintain the dollar's strength.
Okay. How does that happen? By depleting it?
The dollar is often used to trade oil. So if the price of oil is higher than we want it to, that's by definition weakening the dollar. And I think that Russia obviously wants a strong dollar right now. And
because it's
put the world in a position where the dollar or the price of oil is going to remain high. And this is our way of keeping the price of oil down.
They want a weak dollar.
We're trying to push it down.
They want a weak dollar. We want a strong dollar.
Yeah.
Oh.
Yeah.
Right.
Yeah.
Because that makes us able to purchase exports more affordably. But it also, a strong dollar does kind of...
There's ways
that
that hurts us, right? But it's a war.
The overall...
We're in a war right now. And we're making, I think, rash decisions. And I think the strategy of the oil reserve is one that is... I don't have a strong opinion either way. I can kind of see why we're doing it. And I think it's a little bit political. I think it's mostly
we're hurting ourselves to hurt them.
Weaponizing the dollar. I think part of what Russia wants right now is for the world to stop trading oil in the dollar. Yeah. And I think they're getting that slowly. Now there's a lot of inertia, so it's going to take time. And in the interim, it's in our best interest to keep the dollar strong and have countries want to continue to use the dollar, to continue to seek out the dollar for transactions. And this is how we're doing it. And I don't know. I can kind of see both sides of it. I think it's probably a mistake long term, but I don't know enough.
I think it's just a short-term thinking.
Yeah.
That's kind of what I think it is.
Which is politics.
We have this here. We can drain this. There's a lot of pressure with the prices of gas at the pumps.
Yep.
People are pissed off. We can ease it a little bit by draining our long-term strategic petroleum reserves that are meant to be there in times of crises. I don't think you could say America was in a crisis. I think that we just had rising prices. I think Europe was in a crisis, energy crisis.
Right, they're a lot worse off this year.
And so I think it's
relieving our allies
political,
too.
and it weakens our position long term because that's difficult to replenish.
Yep.
And you look at where oil is produced, Saudi Arabia, Russia. And for the first time ever, not ever, but Saudi Arabia just flat out, denied President Biden in terms of what they did, in terms of they cut production when he was asking them not to, and he just completely denied them. And so it was a kind of like a shift in OPEC.
Yep.
And so how do you replenish that? It's going to, I don't know. It's going down now. I don't know. It's going to get probably more expensive to replenish that over time because now there's like a shortage of production. And so we haven't invested in our own oil and gas production at all with this move for renewables and the greenwashing that's going on.
Dude, what happened? Because I feel like in the mid 2010s, like we were like fracking, boom, America was going to be energy independent, like, or maybe that was just all rhetoric, and
it was built on cheap money.
That's right. Well, yeah, and like the advent of fracking. Now, fracking costs a lot of money, and it also produces a lot, and so they're big projects, and we invested a lot all at once, and OPEC said, you know what? Put up production, put all those shale businesses in the United States out of business, and they did. They just took advantage of our free market and greed.
We have it though. That's the thing. That's why this is so frustrating. Is we actually have the resources.
Right.
Exactly.
It's just political, and so it's really, really
operational
frustrating
infrastructure
that we're going to Venezuela and having to beg them for their oil. A dictator. When we actually have the resources here, it just really.
Incompetence.
And the silly thing is, if you look at like a worldwide scale, like the way our oil and gas industry operates is under a lot of regulation, and it's relatively very clean. And so impact to the world, if we just drilled here, created pipelines here, refined here, did it all here, that would have much lesser impact on the globe and climate change, which is an issue, than buying it from Venezuela.
Yeah.
And so it's like anti-ESG, but it's under ESG.
Yeah. Same thing with Canada. Canada is the same boat. Exact same situation. They produce a ton of oil, but they've undergone the same harmful policies. And I think it's like a function of not thinking about security, right? Like I heard somebody say that ESG should have a second S, and that's a security. And that wasn't considered in these policies. These policies were.
It's not even the social. It's just the E. It's just the environmental.
Well,
side.
They focus on that, but I mean, these are peacetime policies. When things were great, when money was free. And now times have changed, and
well, money's still.
You got to start thinking about resiliency and security, and understanding that, you want to come up with efficient ways to produce energy. Ideally, that doesn't harm the environment, but energy is crucial to human flourishing. It's crucial to our lives, and you need to produce energy that's cheap and reliable. And as possible for everybody. And right now, fossil fuels dominates that. That's not even freaking close.
Well, Tyler was talking about on the last episode about how like demand or I think you call it load factor. I think it's called load factor. It's like of the like windmill, if it's generating electricity 50% of the time, it's a load factor of 0.5 or whatever. if it's a hydroelectric dam and it's, water's flowing, 100% of the time, it's a load factor of 1. Right. So these renewable resources have a stupid low load factor usually, like solar, wind, which means you have to way overbuild to get the same amount of wattage, right? Where things like chemical energy, like, nuclear, coal, combustion, like petroleum, these things have a much, much, much higher degree of like capture based on like what you need from like the total materials or so.
Yeah.
You need base load in the grid, even
the base load, that's what he was referring to, right? And then only renewables can be used to supplement the base load. You cannot create a base load off of renewables
because they're intermittent. They're intermittent.
Right, because they're intermittent, exactly.
Yeah. Doomberg just had a great piece, and he made the point, like all the excitement about fusion and how, I forget what university, but they just had an example of more energy out than in for the first time. And how like the media narrative coming out of this is probably going to be anti-fission or like nuclear energy, because it's like, why build all these like dangerous facilities that take long to build and are really expensive when fusion's just around the corner? But it's like
just around the corner.
Consumer fusion is like 50 years away.
Yeah.
And so like, or want to fuck around and find out what's going to happen if we don't build baseload for the next 50 years?
National Ignition Facility in California.
Yeah. I mean, the energy industry is extremely complicated.
Look around, find out.
Right. Not by any means an expert. Energy is as complicated as Bitcoin. And
well, it is,
but from my understanding is nuclear. From my research, I'm a huge nuclear proponent, and I feel like the only reason that nuclear is not happening is again political, which is silly, which is absolutely silly.
Yeah, it's definitely I like sci-fi, like space shows a lot, and like they all like you don't see them powering like rockets that like do interstellar travel with coal. No, dude, they're nuclear fusion reactors. Like the only long term, like if we're really trying to like get off Earth, like if Mr. Musk is serious about Mars, like
I don't want to go to Mars.
We can't even use like well, I don't either.
Looks like a shithole.
Yeah, it's cold. It's cold in Colorado.
It's like
I want to go to Mars.
Barren wasteland.
Can't breathe there.
I don't know why anybody wants to go to Mars.
I want to go to the Bahamas and start a shitcoin exchange.
Yeah, great segue.
I honestly, this is like a tangent for sure, but like I do not understand why these people are so desperate to leave Earth when there's so many problems on Earth that they can try to solve.
Because
like Elon Musk should be focusing on problems on Earth.
He bought Twitter.
Yeah, that's true. He bought Twitter, man. And he didn't do that to make money, I promise.
I would like to explore the oceans. Like, that's a unexplored thing. Like,
James Cameron did that last week with the Avatar. The way of the water, bro. My first
Mars
job
does not look cool.
My first job ever was at a movie theater. I was like the usher.
Your first what?
My first job.
I thought you said your first hand job.
Oh no, this is a kid show, guys. Well, not really, but
was it in a movie theater?
My first employment opportunity was at a movie theater. It was literally the first week Avatar came out, the very first Avatar. And dude, I was like, oh, so this is what working's like. And it sucked because there's like there's kids everywhere. I was a kid myself. I was like 16 or something, but cool to see the sequel come out. It's apparently like underwater, this new one. It's like all about the water, way of the water. So James Cameron's on your team.
I think I read like Kate Winslow or something was underwater for like 17 and a half minutes.
Oh my God.
As a part of the filming?
Yeah.
Well, that's what they did.
It's like a true story.
No, I was reading about this.
I'm underwater.
So normally when they do water scenes, they like put you on tightrope and you move around and then they shot underwater so that the motions were more fluid and I think Cameron was talking about like the viscosity and like how it has like resistance when you push, and it just made it seem the animation's more natural. So
What was your first job?
I was a janitor in an almond plant.
Really?
There you go.
An almond plant.
I was picking up gum under seats, dude.
I was like a glorified janitor. I would like recalibrate sorting machines.
Oh, that sounds way better.
I was a soccer referee.
Yeah.
And it was a brutal job, man. It was that tough time where the parents didn't necessarily understand the rules, but they were very passionate about their children.
Oh goodness, yeah.
I've coached and yeah,
Soccer, football, sport.
soccer, football, sport. That's it.
That's what Beau called it. Something like that. Soccer ball sport.
Yeah, can I plug soccer ball sport real quick?
Yeah.
All right.
World Cup.
What is that?
So it's a sport I invented. It's 2 versus 2 or 1 versus 1. Everyone grabs a fresh new beer can, sets an empty beer can in front of them, even if it's a team of 2, 1 empty beer can in front of them. Stand as far apart from each other, the 2 and 2 or 1 and 1. Kind of depends on how good you are, but you pass the ball and you try to knock over the other team's empty beer can. If you do that, you start drinking as fast as you can. And while you're drinking, the other team picks up the beer can you just knocked over and runs it to the middle. There's something in the middle they need to tap. Once they tap that, you stop drinking. First one to finish their beer wins.
Oh, wow. I like it because there's an exercise component.
Yeah.
Yeah, you're running and drinking and throwing up, all of it.
You're really full body workout.
Carnage.
Yeah.
Well,
Cool, man. Well, congrats. Like,
soccer ball sport.
That yet?
Yeah, it's on Instagram.
Well, technically, it's trademarked now because we mentioned it on the podcast, and you don't have to file for a trademark.
Yeah.
Wait,
So
that's
it's like
that's real?
implicit. Yeah.
Yeah.
Nice, dude.
If you want like the C or the R, I think you have to file for those. TM is like, if you use it, it's like you're just using it in trade. It's like, so you're trade. I think, I'm not 100% sure. But
Okay.
anyway, soccer ball sport. Check it out.
Soccer ball sport. Follow us on Instagram at soccer ball sport.
Well,
Nice.
Q4 guys. I think we'll do like, we'll wrap it. We'll like, I think we're going to run out of space on the camera, on the memory card. So Q4 maybe the biggest quarter, I think. At least like the most epic. I mean, the Luna thing was, sure, that was something, the BlockFi thing, I guess, well, that technically was Q4, right? But like, this Q2 was pretty bad with Celsius and Voyager and all, but FTX, right? Tom Brady, the whole, like, just the level of
Caroline Ellison. Ooh.
Ooh, baby.
Yeah, I mean, it was huge, man.
Yeah,
I mean, it's still
What was huge? Her orgy party or
the layers, man. The layers in FTX was
the layers
huge.
of humans and on
just
top of each other.
outright fraud, and it's honestly, it's gross. And SPF, he's a big fraudster. I do want to say, like, Luna was $50 billion. Like, people, like,
Holy shit.
they
I forget it was
wiped
that
out
big.
$50 billion. So even FTX, it doesn't really compare to Luna.
Yeah, but
I
that's
mean, it
because
does. It's
that was
like-
the market value at the time, though. Like,
Yeah, I
it was
understand.
$50 billion of air.
Yeah, I
it wasn't
guess
really 50 billion.
Well,
I guess-
apparently so. Well, how many assets were on FTX? Like 9 or something?
Nah, it was like somewhere between
Well,
one and
their
20.
their whole was like around
10?
8 or 9. Yeah,
I heard so many different numbers.
yeah. It's it's a dynamic situation. It's still unfolding, but
Yeah.
I mean there's outright fraud in every way. I mean, he just got the book thrown at him. Like every single
Well, he's in
thing
jail
you
now,
That's
like
good.
wire fraud, security fraud,
Well, they had a
election
Telegram channel.
fraud. Like,
They
Conspiracy.
had a Telegram channel called Wire Fraud, so he wasn't trying to hide it.
He did?
Yeah,
That's
you didn't
real?
read about that? Oh, yeah, they had a Telegram. I mean, that's what I read on Twitter, so actually I have no idea.
I mean, Alameda literally had to like, no liquidation, basically. Like, the whole thing was just a huge.
And they sent, when you wired money to FTX, you had to send it to Alameda Research. I wish
I wonder why.
I'd
I
seen that, because that would have been a big.
Like you say that, but
Yeah,
I mean,
you're right.
there
Because I
is
knew they were connected.
hundreds of thousands of people. I mean, everybody knew that it was shady. In hindsight, it's like, it's 2020. Hindsight 2020. But FTX. I'm just glad he's in jail now. He's actually in like one of the worst jails in the entire world.
I saw that. Like, yeah, top 5 bad jails.
In
Yeah.
Bahamas. That
I
who'd have
honestly,
thought?
that's hard going from, what was his network? That it was like 20
$1
billion, or it was like
Yeah.
15, 20 billion to
But it was all
in one of
air.
the worst prisons in the world. Like, that is a fall of grace.
Wait,
Like,
why is this prison so bad?
I mean, I'm talking about like conditions and
But isn't Bahamas like, I guess it's a poor country relatively, right?
Yeah, I think so.
I don't know why I haven't studied
probably like
the
America, where
Bohemian
it's like
prison system.
huge wealth inequality, where like you have people like Sam Bankman-Fried who like have the mega mansions and live the island, you know.
He was
flashy.
an island
boy.
boys.
Wait, was that 2022?
I don't know, dude.
Island Boys?
What quarter was that?
That was sometime in the easy money before the Fed hiked rates. I know that.
That was definitely.
That might have been like 1% on the Fed funds.
That might have been 2021.
Yeah, they were still at 1%. Oh, October 2021.
That was around the top. That makes sense.
Yeah.
That makes sense.
October 2021. Bro, the Island Boys. Wonder how they're doing. You think they're still doing cameos?
They probably are doing pretty well, I'd imagine.
Better than us.
Do you guys follow
75 views.
Autism Capital on
Yes.
Twitter? It's a great resource.
Yeah,
he
it's a good
became
one.
the sleuth lately with FTX. He's really like dug into all the files. Like
He showed like SPF's medications he's on in prison.
yeah.
Oh, yeah. He's the one that broke Caroline at the coffee shop.
Yeah.
Which was amazing. But yeah, SPF, you know, I don't know.
He's an island
I don't
boy.
really feel bad for him necessarily, but I mean, he has to be in a really bad spot. So for anybody who wanted justice, like he's getting it right now. And I think he should be extradited like pretty quickly, because the worst thing that would happen if something like really bad happened to him and we couldn't have like a fair trial or anything like that.
Yeah, I mean, give him a fair trial. Like, you know, he's an American and he deserves a fair trial, just like all Americans do.
He's probably going to get like 50 years.
Yeah.
You think so?
Yeah.
50? I mean, he does have...
You think he's going to serve 50 years?
No.
Probably not.
Dude, the jails won't... Bro,
I mean, Madoff...
Dude, there's not going to be physical jail
Madoff
in 50 years.
Like 100 or something? 60 or 100?
You're just going to...
He was already old.
Physical jail is... They're going to put the Sword Art Online thing on your head and be like, have fun being in the metaverse forever. And like...
No way.
Bro. I don't know.
They don't get phones.
No, they don't get phones.
Smartphones.
They're trapped in like... Imagine like... You get trapped in like some kind of virtual reality that's like a shitty level where it's just like you're stuck in like Five Nights at Freddy or something for like ever, or like for 5 years. And you wake up and there's just like bears coming at you trying to stab you. That would be psychological torture because you couldn't leave it either. Like
you think that's what's...
That's what jails of the future are going to be like.
You think jails are going to be VR?
Yeah.
VR jails?
Yeah. Way easier. Way you can control things in more finite.
Bears trying to get in the windows and kill you?
Yeah, with
that's
knives.
Like this whole year.
Yeah. Yeah.
I don't know.
Yeah.
VR jails?
VR jail.
VR
jail, bro.
I haven't thought about that one before.
We really took a turn here in Q4.
Free Ross Ulbricht.
Yeah, dude. He
did some bad shit, but also he shouldn't be away for life.
Has it been 10 years? This year was 10 years, right? Or 9 or 10? No, I mean, Silk Road wasn't shut down until...
He's done his time.
2013. Oh, yeah.
He's ready.
And you know that, well, I guess I don't know, but I mean, according to multiple life sentences, he will do way more time than SBF unless SBF also gets multiple life sentences. So, I mean...
I disagree with the 50 years. I think he's going to get the hammer thrown at him.
Really? I think he's going to get way less. I think he's going to get like 10 years. I don't think he'll get...
Are you serious?
I'm serious, dude. He does have eight
I don't know,
counts,
elections fraud? He literally influenced elections?
Bro, but he influenced it in their favor. So, like, he's good.
Well, oh, man, yeah. All right, well, we're getting into...
whatever.
Well... I don't know, man, but I mean, he might get some leniency because people don't want him to talk.
He'll cooperate. He'll
people
snitch.
Don't want him to talk.
Well, maybe Caroline already snitched.
Caroline definitely snitched.
And
that's why she was in New York.
She's definitely a state's witness.
Yeah.
Like. What about San Trabuco?
Oh, dude, that was another sign. That was the canary, dude. He just left.
That
he just left over the summer.
Honestly, it's been a bad year for Sam's in general. When Sam left...
Are you talking about yourself right now in third person, Sam?
No, I'm just saying. I'm saying like plural Sams in general.
So it's been rough for the
Uncle Sam's bond market did really poorly.
Guys, you know,
exactly.
you know what is the inflation adjusted bond called? The tips. But what's the thing? Treasury Direct, is that the tips? Yeah, Treasury Direct. You remember those were yielding like
9.6 at the top.
9 point. Are they lower now?
I think they're like 6.5 or 7.5 last time I checked.
Even though rates are higher, because it's not based on interest rates, it's based on inflation rate, right?
Yeah.
I have a problem.
You can also. Yeah, I do too.
Yeah,
well,
I think the Fed manipulates the tips market.
We went to dinner, and I gave him 20% tip, but then I go to look at the receipt, and there's a 3.5% living wage fee. Motherfucker, pay your employees a living wage.
Sign of the times.
I'm over tips, bro.
Sign of the times.
I still gave him 20%, but I was like, bro.
I guess we're going
and they
here.
didn't even put that on there. You didn't even know unless you got the receipt.
It's insane. These iPads at the check counter, man.
Dude,
they're insane, dude. Some of them I saw, they just start at 20.
Start at 20.
That's what this was. It was 20.
30.
It started at 20, and I was like, we were in a hurry to come get you from the front door, so I was like,
yeah.
Fine, 20. And then as I'm walking back, I'm like looking at the receipt because,
And this dude's making me a sandwich, dude. It's like, I'm like,
yeah,
we didn't even tip that like 5 years ago.
Yeah, I know. And it was crazy. It was crazy. But anyway, tips. I don't like tips in any way. Pay your employees the living wage.
What other Sams are having a bad year?
SPF, dude.
Oh, that one.
We just talked about it. He's in
bad
one of the worst presidents in the world.
Sam Trabucco, Sam Bankman-Fried, Sam Callahan's had a killer year. I don't know, but
been pretty good.
I would say that out of the, I don't know how good Beau's year has gone, but your year definitely went better than mine. There's no way it didn't.
It's been 2022 has been all right.
Yeah.
It's been a good bear market. Like I said, I was very annoyed and with the bull market. I was not having a good time in the bull market. Like net worth was up, but in general, I was not having a good time.
One Bitcoin. So
yeah, I don't know. So like bear market, just so much more signal. I'm having a better time now. Just building and there's less noise and a lot of the goofballs are gone. Not all the goofballs. I think there still needs to be some cleansing here, which brings us to like, where do you guys think things are going? Because personally, I think that we haven't really seen the bottom.
No.
We're going to 10K, maybe
12.5.
12.5,
That's
13.
my prediction.
We're going to go right above where my lowest limit order is so that it doesn't trigger. That's probably where we're going.
I don't know. It's hard. Like the price, like Bitcoin led a lot of these assets. And so when you look at
it led the equity markets up.
Oh yeah. So like it could be
in 2020.
now. Like it could have led it, and you look around and all the signs of a typical bear market, like minor capitulation, Ponzi blowups, right. Speculators are gone, prices down, whatever, 75-80% from the all-time high. Like those are all signs of a bottom. Now,
agreed.
Bottoms can be dragged out a long time.
I think we're magnitude-wise, we're probably like
near the bottom.
Timing-wise, it could be another year.
Yeah, exactly. Like
we're not going to go like to 5K.
No, I just think
there's just too much money in circulation compared. Like,
that's
think
true.
about it. If you look at Bitcoin over M2 instead of just like Bitcoin's USD price, but Bitcoin over the money supply and use that, like we're way lower than we were 5 years ago, even. Because when we were 20K at the all-time high,
2017, 2018.
Think about what the money supply was then.
Yeah, but the 20, I kind of don't like, because
but then the Bitcoin supply,
it was at 20,000 for like
one day,
48 hours or something.
Yep. Yeah, that's when I bought. Wait, you guys didn't literally empty your bank account at the top? Fuck.
Oh my God. But you do bring up a good point of liquidity. I've been thinking about this actually. So if you think about the economy is driven by, like Ray Dalio has that 30-minute video, How the Economic Machine Works, which I think everybody should watch.
It's good on YouTube.
Yep. Basically, one of the lessons from that video is that one man's income is another person's spending, vice versa. One man's spending is another person's income. And so what drives nominal income in an economy? And in my opinion, it's like 3 buckets. It's credit, and it's money or liquidity, and then it's income. And so when you look at the current environment, we've had tightening credit conditions at the most rapid pace ever. So the cost of capital is going up. And so when people borrow money, they borrow it to spend now money they don't have. And so it's spending in the economy. If the cost of capital is up, they're not spending enough. You're starting to see interest rate sensitive sectors like housing and autos start to roll over this quarter.
Right.
And so you have tightening credit conditions. That's one thing. And then you go to income. If you look at real disposable income, it's just getting eroded away by inflation over the last 12 to 15 months. And so people's incomes are getting squeezed. Cost of essentials like food, housing, transportation, it's all gone up. And so they're not spending as much. You saw this in like the real retail sales. This month is negative actually. And over the Black Friday, nominal spending was like record highs in dollar amounts.
Yep.
But actually in real terms, it
down
was
1.6%.
Yeah, it was down, right? So they're spending more and getting less. And so incomes are getting squeezed. And so that's another form of spending. And then you go to liquidity, and the Federal Reserve has turned from quantitative easing to quantitative tightening. So since July, they've reduced their balance sheet by $60 billion a month on average. So that drains reserves out of the global financial system. And then also M2 money supply, like you said, it's actually almost negative year over year, which would be the first time in 60 years. And so
feels like it.
Right. And so all of that results in decreased or declining economic activity, aka recession. So you have tightening credit conditions, you have draining liquidity, and you have income squeezed. And so if you just go back to those first principles, that's why I don't think the shoe has dropped yet, because you're still seeing all those things, those dynamics, until we see a reversal in even any of those three. I just don't see how we don't continue to see deterioration, and you're seeing underlying deterioration in the economic data. Like I said, housing, autos,
right.
Those are leading indicators. So
I 100% agree with all of that, and just like add like the significance of the housing, just seeing house prices start to fall pretty quickly. And we're talking about the lag. I know. Talk about a lag of mortgage rates going up.
And house prices too. Dude,
Las Vegas and Boise have already seen 15% declines in the price of homes. How many people were putting down 5 or 10% down payments just a year ago?
Negative equity.
Waiving inspections, paying 20% over asking, or sorry, that's an exaggeration, maybe 10% over asking,
right.
10% over asking. It's, it's the pain has just started, and like the negative wealth effect of people losing value in their homes. So that's why I think like the macroeconomic situation, but when we're talking about just Bitcoin on its own, you're right. It's got every indication of being near or around a bottom. I just don't think like the whole macro situation is going to turn for quite a while. So we're probably not going to have like a V-shaped recovery. It's probably just going to chill for a while, accumulation, hardcore plebs, stacking all next year. And,
it's maybe possible. I mean,
is that what we're going to,
pretty scary.
So next year is more of like a treading water year.
That's what I think.
I think we're going to see this show up in earnings finally. But
does that mean that like kind of Bitcoin leads the market, right? I've noticed that whatever Bitcoin does, the equity markets kind of follow.
I like appreciate that, because Bitcoin is like the purest. It's like, because it's an insurance policy on like too much government.
Yeah, it's like default
printing and overly low interest rates. So I get that idea. The only thing is Bitcoin is just a drop in the bucket compared to the overall system and the people that are involved.
Right.
Only the minority think the way that we do and think that it's a insurance against the whole system failing.
Right.
And so because the average or the fringe Bitcoin user, I don't think thinks that. I don't think Bitcoin is leading necessarily. I think if, like, let's say behind the scenes, like BlackRock and Goldman and the most like influential big institutions are getting into it, Fidelity, then it's a leading indicator, because it is the purest form of government overprinting, like insurance on government overprinting. So I don't know. I guess I'm a little torn. I see that argument, but it's also so small and so few people think that way.
I'll take a tread water year. I mean, like, it's DCA. This is like, if next year's like a tread in water, we're just hanging out around 20K. I mean, great opportunity to be meaningfully getting to significant number that you'll never probably ever achieve otherwise ever again in your life.
That's right.
I think we only get a treading year if we see
Massive
some kind of
deterioration.
regulatory backlash or something.
Mhm.
I actually think that next year is going to be pretty bullish.
Really?
Yeah.
I do too.
I think because
sitting here
the
quietly.
early
See you at 100K.
the early part of 2023 I see as painful, where we could make a new low, where we could see earnings come in and profits decline for these companies.
But that's the precursor to the Fed lowering interest rates.
Exactly.
The
so,
rest of
it's got to get worse before they capitulate, and you see that, and then you also see with that labor is the greatest cost for these companies. So if their profits and earnings start to get squeezed, then they're going to start increased layoffs, and you're going to start to see that.
That's when the
spread
Fed
out
acts.
about the economy. Since the unemployment go up, you'll likely, if the Fed continues to hold rates higher for longer, or even keep hiking rates, which that's what Powell made very, very clear, that they expect to keep hiking rates.
Yep.
Whether you believe him or not, but that could cause a credit event, what I was saying. And it doesn't matter if it's in the United States or if it's in Europe or if it's in China. It's all interconnected.
Yep.
That's the interconnectedness of credit, and it caused contagion, which could cause a correlation to one event, crash,
spreads blow out,
banking crisis. Even with their reserves built up the way they are, it could still cause a lot of issues. And so if that happens, things seize up. You could see a Fed pivot. The Fed pivot doesn't happen unless things get much worse.
They're going to keep hiking and giving themselves as much headroom as possible so that when inevitably something happens, they have as much ammunition, because last time they didn't really have any, right? So
I'm willing to forecast with a high probability that what we're saying will occur. It's just the timeline that's difficult. Because
timeline's difficult.
I think I would have told you last January that, the Fed's starting to raise interest rates. They won't get past May.
True.
Right. Well,
it's tough. Yeah. But I think it's important to note that the Fed is just one aspect of this, and the other one is the government. And so if there's more people and more layups that happen. No, I mean, the Treasury, I get that. But like,
the Treasury.
but listen, like, it doesn't seem like the government or politicians are blaming the consumer price inflation or attributing it to their spending. It seems like they have all these other excuses. They're not taking blame for it.
Thanks, Putin.
Yeah, exactly. They don't think that had anything to do with it.
Right.
And so if you see increased unemployment, there's going to be people in the streets begging the government for stimulus checks. You can't put that back,
Can't put that back in the box.
Cat's out of the bag. And they think that didn't actually cause a lot of this inflation. They think it's the supply side. They think it's
the war in Ukraine.
They think it's all these other things.
Money that all got printed a couple of years ago.
Right. So the Fed will cut rates, but also I expect government stimulus
again.
And I expect that again. And the combination of fiscal stimulus and accommodative monetary policy, that is a boon for scarce assets.
Yeah.
And so if we see that, I think Bitcoin once again will be one of the benefactories of those decisions. And we'll see what happens with the only thing, like, we'll see how low. I think we'll maybe see a little bit of a rally here. We'll see some lower CPI prints, thinking it's getting better and all these things. And then maybe we'll start to see the shoe drop in the economy. And even if inflation's at like 5 or 4%, they'll be like, that's good enough. We're gonna start doing more accommodative things, and we're gonna start printing money against stimulus checks. And they just can't connect the dots that the monetary policy and the fiscal policy was one of the main drivers of the rise in consumer price inflation that we've seen across the world.
They probably know it. They're just not willing to say it.
I don't know.
But back to the Treasury real quick. I just want to, if we're talking like bombshell smoke shows that have headed both institutions, Janet Yellen. Just have to say.
Oh, well, I hope she makes it to next year.
I love Janet Yellen because she comes across as the nice grandma.
Sam.
And I think that's why she's, What?
Oh, no, sorry. Go ahead.
No, I just...
There's a clip. Can you hit There's a green button right behind you on the soundboard. Nope, not that one. That.
To ask questions about what the right legal structure would be for virtual currencies that involve non-traditional players that aren't regulated by.
And I'm so sorry because our times, you know how our time runs here. If there's going to be a new American exchange for the bitcoins, they're going to be using banks.
The bitcoins.
If this exchange is using banks, you all will have.
If they use banks, but my understanding is that Bitcoin doesn't touch banks. They don't. It's not settled.
Why did other governments? Why did other countries believe they had to get involved?
Well, you could get involved if Congress wants to get involved and set up a supervisory regime.
Okay.
Harrowing.
Janet Yellen.
Might have to relieve myself.
Well, I think we all probably got to 2 hours and 10 minutes we've been recording. So
Janet Yellen.
Well,
I have can I talk shit about Janet Yellen?
Yeah,
before we
sure.
start? No, I just think she's just so incompetent. Like her entire career, if you track it back to when she was even like the San Francisco Fed president, she's just wrong about everything. She's like the epitome of
She's
fiat,
really good at speaking.
failing upwards, and now she's the U.S. Treasury Secretary.
Yeah.
And I laugh because it's just that's the only thing you can do. It's crazy. It's crazy, and so that's the world we live in, man.
Well,
Central bankers are incompetent through and through.
Yeah, it's
you know, as much as we like to rag on the systems in place and all of this, I think it's important to keep in perspective that I am thankful that we live in a country where us three aren't, put in jail or like dismembered because of the things that we say on this podcast and some of the non-favorable opinions that we have about our politicians.
Even if she wasn't hot.
Yeah. I don't know.
I'm just saying,
Beau,
thank goodness.
in
Look,
China.
all right. Well,
Yeah, you guys would go to jail in China, not me.
Yeah, because he's a sympathizer.
it's true. He's a China simp. Well, guys, I've had a lot of fun tonight, and this year hasn't been fun at all. But this is probably the highlight of it.
I think it's been fun. I mean, I might be crazy, but I mean, seeing all these fraudsters blow up, and
It is proven the point that Bitcoin maximalism does have some meat to it, right? Like it wasn't just all talk.
No,
or
absolutely.
some of these idiots,
Can-
like all
can-
these hedge funds. I just
Sorry to interrupt. I just want to make it clear. We've spent a lot of time talking about like the blowups in crypto. Like Bitcoin is the antithesis of that. Bitcoin was born out of movements that were anti all of that.
Right.
And so it's cross-collateralized with a lot of it. And so we can't deny that that's going on and affecting our lives.
The
and
crypto
Bitcoin
exchanges
and shit,
are they're more like the fiat banks than they are like Bitcoin.
Exactly.
In a lot of ways. And
they're worse versions of the fiat
Right.
system that Bitcoin was
Unregulated
created
leverage.
to
I think that's a really high point to kind of leave it with is that, it's been such a confusing year and there's all these crypto blowups. And at the end of the day, there are more Bitcoin in self-custody by individuals than there ever have been in the history of the network.
all good shit.
And that is because people are starting to distinguish the difference between Bitcoin and unregistered securities that are created by a small team who are oftentimes anonymous and like dump on you. So,
Yep.
all of this.
If this had to happen for us to get there, then the network is stronger and better for it long term.
Yeah, I've had people reach out and be like, "Wait, you're telling me that we've had like 5 Ponzi schemes blow up,
And now I should buy Bitcoin?
and the size of Enron, and Bitcoin is still at 16, 17,000.
Yeah, wow.
They're like, all right, I'm going to take another look at this
Right.
thing.
Like $1/3 of $1 trillion.
Right. Even after
I mean,
all of this, yeah.
The
That's a good point.
resiliency of this thing, I mean, it's the honey badger, and honestly, wipe it. I want to clean it all out. I at this point might as well, like whatever's out there, just clean it all out.
Well,
Powell can jack up rates all he wants, to
CZ,
clean out all this stuff. Bitcoin will
He's
still be
coming
around.
for you. He's coming
Bitcoin
for
will
you.
still be around. It doesn't matter. I don't care if Binance goes down. I don't care if any of this stuff goes down. Bitcoin will survive, rise from the ashes like it always does. I mean, because that's what it does. I mean, it's that simple. So I have all the time in the world, man. I'm a young person. My time horizon is very long. And so my thesis hasn't changed at all. Bitcoin hasn't changed at all. Actually, the fundamentals have improved in 2022, no matter what you look at. If you look at the adoption metrics, if you look at hash rate, I mean, it's all up to the right. So it's just like a matter of perspective and what you focus on. And Bitcoin's as secure as it's ever been. It's still 21 million. And it's a stacker's paradise, and
that's
just
it.
keep stacking sats.
Well, I was going to leave us out with a song.
We still have to make 2023 predictions.
So I guess I'll start us off. My prediction for the block height is hold on, 144 times 365.
I have the feeling he's going to be right again.
Be the first time this year. I have a prediction that we'll end the year at roughly block 820,000
Wait.
ish.
You looked at me like
Block 820,000 will be where we end 2023. That is my prediction. Somewhere right
it's got
around
a little bit
there.
of cop out, but you know.
I mean, it's a highly probabilistic but not guaranteed prediction.
Pretty good.
Having coming in 2024, I think actually I'm with you, Sam. I think next year is a lot more bullish than people think. First quarter sucks. Big pivot by second quarter. I expect to be flipping JPEGs by next winter. So,
Oh, fuck.
Oh my god.
BuyTrumpCards.com.
yeah, don't please.
I mean, are we
don't.
doing price predictions specifically?
Whatever, man. Whatever you can
All
fit
right.
in the 5 minutes before the camera cuts off. So,
Man, predictions. Well, I kind of already talked about my.
Yeah.
I do think it's going to be bullish.
I think we end the year above or below 45,000.
45. I mean, I don't know if it'd be that
Below.
bullish. Yeah.
last year I said 100 at this episode at the end of the year. So now I'm definitely wrong again. But
I mean, I've expected. I'd like learned to expect the unexpected at this point. Yeah, I think. I don't know about 45K. That'll be a pretty big jump. But I do expect it to be higher than it is today.
we will go
I do.
over 30K at some point next year.
I think it'll be
Whether we close
higher
above
than
it or not,
20.
I don't know.
Definitely higher than 20K. And I don't really know. Like, it could kind of take a mind of its own at that point. Price is just kind of a crazy thing. But do you think it'll be higher? And I think,
Hash rate predictions, maybe?
yeah, I was going to go hash rate.
We're at current hash rate is 230 exahash. Difficulty 34 trillion.
I don't think it's going to go that much higher, personally.
Under 250.
Because I think there's still pain to be felt with miners.
That's still 8% year over year. I mean, that would be a very, very low hash rate increase next year. 8% for the whole year.
Relative to the last couple of years, yeah.
Yeah, I mean, it went up 8% a few times in a just one difficulty adjustment.
Now there is a lot of mining machines still on the sidelines right
Mhm.
now, just because of like permitting processes in Texas, and
But there's also a lot coming to market as
Yeah.
a lot of these companies are going to fold.
Yeah, but
Yeah.
that ASICs are going to get plugged back in. They're not going to go away.
Yeah, but they go through bankruptcy proceedings, and
They
that
may
takes
not
time.
for a while,
Yeah.
right?
No, it's funny, these ASIC backed loans, all of these lenders like Galaxy and NYDIG,
Right.
they
Chaos.
basically, the miners had
The tattoo. We
they
didn't cover the
default-
tattoo.
they default on the loans,
The wolf.
and then
Oh, God.
these lenders get all these miners, and they're like, what do we do with these
Right.
things?
They're not.
right? So,
They're not miners.
yeah, they're not miners, so
You can't just plug them in.
you can't
like
just plug them in. They
like
don't
you
have
said.
the
I disagree with
infrastructure. Yeah.
you just plug them in.
I don't know. I see I guess I see hash rate more or less being like flat, I guess. That's kind of how I see it.
Well, Beau, what you got? What you think?
So Sam, before we recorded, you said you had something to say about this, but this is coming from zero research, but just the idea that the Fed is trying to create a central bank digital currency, and I don't think they know how to do any of it. And I think Circle is kind of, hey, look at us, we want to be regulated and all this shit. So I think some news around the Fed teaming up with Circle, but that's based off very little research. That's a shot in the dark.
I do believe that USDC will be fully embraced in 2023 by the government.
Something could.
It's not embraced.
Formalized.
I mean,
I'm
the only
saying
way
I
that would
believe
happen is if the Fed
embraced.
actually acquired Circle.
Well,
They-
they're not going to
there's-
acquire
There's
it.
partnerships.
They've acquired.
Well, they did pull out of their public offering that they were
They've
gonna do.
acquired other entities in the past.
Really?
Yeah. So
I guess it is a quasi-public, quasi-private.
So that would be like, that's the scenario, because
like where Circle becomes a Fed
the idea
member
that
bank.
USDC would be a CBDC is,
It would have to be acquired by the Fed. Yeah, it
Fed-
wouldn't.
you gotta
the
understand,
Fed
like,
would need
there's no
100%
reason for
of
them
the
to do that.
information.
Yeah. I mean, one is a liability of the private company, one is a liability of the central bank.
Right.
They're not the same things. One would be a transmission channel for monetary and fiscal and tax policy. One would not be.
Right.
Um,
Can't enact policy.
yeah, there's no reason to like give that power to a private company. So
Right.
it would have to be some.
Well, they could
That's a good point.
commandeer it, right? No, that's probably not
you
possible.
literally
No,
acquire it.
Yeah.
Just acquire it, buy it.
They can make money.
They can just buy it because they can print money so they can buy it whatever price they want.
Yeah.
Fair.
Jeremy Allure would.
Jeremy
I'm
Allure
sure
would
the
be like-
Circle people would like it.
And
Yeah.
they'll be good with it. Yeah.
No, I mean, I do think like they've done this in the past. I mean, the government's not good at technology, so they've utilized the private sector
Create it.
to create it, and so I see where you're coming from, but the USDC pre and post the Fed involvement would, I think, look very,
Yeah.
very different.
Just
They would just
Fed.
kind of utilize the technology.
Well,
that
ETH has been. I mean, ETH has gotten a lot of OFAC compliance with the minor boost thing. I truly don't really know what I'm talking about, so I'll just stop. But for like the blocks are like OFAC compliant for almost majority.
Oh yeah,
and so
like
since the merge, and so I have imagined that like we're just going to see a continuous differentiation between the stances of like ETH is more like cooperation, Bitcoin might be more like
I've said
No.
the most bullish thing to happen to Bitcoin in 2022 was
the ETH merge.
ETH merge.
Yeah,
Because the
Actually,
separation
before
of
that,
proof of work and proof of stake.
it's clear now.
Yeah, it's clear now, and proof of stake is inherently more insecure and more
Absolutely.
political and more prone to centralization, which we've seen almost immediately. And then what you're talking about is the MEV boost
Right,
relays, basically flash bots.
right.
Basically, they're OFAC compliant.
Right.
They're a US based company. They're the best at that game of MEV. Basically created it. And the censorship there, it's hard to tell how that's going to stop because the incentives aren't right.
It's okay.
So
All right.
so basically, Vitalik and hashtag from Flashbots published a piece, and basically they're saying, "Hey, can you please just take less profit for the good of the network?" And to me, that was a huge red flag because it
God.
basically showed that the incentives are broken.
Yeah,
Yeah.
because if
Right.
they're having to
Exactly.
pander to them,
Yeah.
to
Oh, please take less profits for the good of the
the
network.
incentives.
And the incentives aren't right.
Just shows you how good Bitcoin is.
That's right.
Right.
Just
So-
built in the perfect incentive system.
Right. So
Well,
once,
great job, Satoshi. You did.
yeah, once you move away from the incentives
You
and
done?
you're asking for the altruism of the actors, it's,
Well,
yeah.
not all altruism is effective. So if there's 2022 slogan of the year,
Yeah.
Not altruism is effective.
not all
Cheers,
altruism
boys.
is effective. All right, boys.
That was fun.
To next year, to 2023. We'll see you then.
Guaranteed
Thanks for tuning in.
45K, not financial advice.
One Bitcoin equals one Bitcoin.
One Bitcoin is one Bitcoin. We'll see you next year. Hit that subscribe button if you enjoyed the show. Thanks for listening.